Good morning, everybody. Welcome back to another episode of the Market Open. It is Tuesday, March 4th, 8:45 a.m. And, we're red. The reason the thumbnail today is red is because I felt it was appropriate. Because if you look at your portfolio today, unless you are perfectly hedged, or unless you had massive puts on the market, or unless you're hiding out in Verizon or TLT all year, you are probably feeling a little bit of red. And I think today is going to be one of the more aggressive days that we've had in 2025. Unfortunately, being in the month of March is not changing some of the problems we had in the second half of February. We're red across the board. Palantir, 79.85. Robinhood, 44.71. That seems to be a new low for the year, or for at least since this volatile decline since February for Robinhood. Grab, 4.63. Grab was $5 yesterday. Tesla, 272, $2, and then Tesla goes below 270. Reddit, 157. SoFi, 1286. Nvidia, $109. Nvidia was 119 yesterday. Nvidia was 125 yesterday, actually. So it's almost a 30% decline from the top. And then Rocket Lab right here, 1733. The entire market is obviously taking a nasty beating across the board. Bitcoin actually kind of holding up at 83,000. I thought Bitcoin would get hit even worse. But yeah, everything's down minimum 3%. I mean, it's hard to find a name that's not down at least 3%. If most likely it's down closer to 5%. Even the S&P 500 right here is down another 0.5% in the pre-market after falling 2% yesterday. We're going to talk about why this is happening, how this is happening, what the implications of this are. Is this the bottom? Is this bottoming? Is this just getting ready to be a knife that continues to fall, aka this is not the bottom? I mean, we'll talk about a lot of stuff happening here throughout the entire show today, but nonetheless, no matter the explanation for why it's red, it is red. And I know a lot of people have real money that they're losing right now. The one thing I can say here is that I am losing money with everybody else. We're kind of all in this loss together. But more importantly, if you're invested in the right companies, these are the growing pains of being an investor. It is not easy to be an investor. And over the past couple of years, it might have felt like it was easy, but we all remember what things were like a couple of years ago. And a lot of people that are much older than me, lived through 2008, .com bubble, all that stuff. So this is what happens. Equity prices are basically fake. They're prices that the market at a certain period of time determines what is the fair value for a company. If you even want to say fair, because many times equity prices can be undervalued, overvalued, and things go up, things go down. The fundamental question is, are you in the right names? And if you're in a horrible name that's never going to come back, then yeah, it sucks. If you're in the right name, it's kind of a waiting game. And based on the news updates we got overnight, particularly at 12 a.m., it is going to be a waiting game for a while. So what is the news? Let's start off with this to get into it, and then we'll keep going from there. Real quick, the 10-year, before we get into what's going on with tariffs, which is kind of the headline for today, 4.136%. I mean, we were complaining about 4.8% on January 10th, and now we're looking at 4.1. We are, I mean, if this keeps up the way it's keeping up, we are going below 4% on the 10-year. And that has implications that are good. It also has implications that are not that good. But nonetheless, bond market holders are deciding, or at least bond market participants are deciding, that we are going to start buying up these bonds, which is how yields come down. You have to actually buy the bond because they are feeling pretty uneasy about the nature of where this economy is going. Obviously, they feel that rates will come down. The Fed CME tool is now pricing in 3 cuts for 2025. It was 1 cut 3 weeks ago. Now it's 3 cuts. Why is that the case? Not because inflation's magically coming down, which hopefully it does, but because the economy is weakening in the eyes of, or at least in the perception of, different probability metrics out there. And that's why we're pricing in more cuts, which obviously will get the 10-year to come down. So we got a lot to talk about, a lot of stuff going on. We got Target earnings, which is actually a really big piece of the puzzle in terms of how this is playing out. I think let's get started with the tariff news. Here's an update on what happened at 12 a.m. last night. TLDR, the tariffs are officially live, and China and Canada and Mexico are retaliating.
Hey guys, good morning. So this is Trump's most aggressive trade move yet. This is far bigger than anything we saw during his first term. And there was a lot of hope, and I would say even expectation, that we would not get to this point, that we'd see another delay. But as of 12:01 a.m., the 25% tariff on Mexican and Canadian goods, as you just laid out, that 10% tariff on Canadian energy, and the extra 10% on China, those are all now in effect. So this covers well over $1 trillion in trade. And that's before you start to count in the retaliation retaliation. So it's upending not only decades of what has been fairly open trade across North America, but it also tears up President Trump's own North American trade deal that had been a signature accomplishment of his first term. So now all three countries preparing to respond. Canada has put out a list of about $107 billion US dollars in US exports, mostly consumer goods and food, that will start to see tariffs. They're also discussing some non-tariff measures, things like cutting off exports of electricity and of nickel, potentially ending some contracts with Elon Musk companies, Starlink. China's also putting up 10 to 15% tariffs on US goods, mostly food, and putting 25 American companies on various trade blacklists. We do expect to hear more from Mexico's president later this morning. We might get some specifics on retaliation then. But guys, I would say the big question for today is also whether we hear anything more from the White House and whether a strong market reaction could lead Trump, I would say, to potentially pull back. Guys?
Yep, we different countries, different rationales, fentanyl, make things here, renegotiate the USMCA. We got a lot of different, some could stay on, some could come off. Thanks, Megan.
So, I mean, look, that's the update. At 12 a.m. last night, Trump tariffs officially went live on Canada, Mexico, and China. On Canada, Mexico, it's 25%. And on China, I believe it is 20%. The proposed reading 3 weeks ago was 10%. That is now 20%. And as a result, you've got tariffs that are hit across the board. Here is the exact number of tariffs, so everyone can see the percentages right here. And this is why I think we're down right now. So, look, do I think SoFi deserves to be below 13, Rocket Lab at 17, Nvidia at 109? Absolutely not. However, if people remember 2018, this was what we experienced towards that November to December timeframe, and that's when the markets really took a beating before Jay Powell started lowering rates in 2019. It was because of a trade war, particularly with China, not Canada and Mexico. Now we're adding Canada and Mexico to the mix, but this is exactly what happened back then. Markets did not deserve to get to those artificially low levels, but they did because people were uncertain. 25% tariffs on all goods from Mexico to the U.S., 25% tariffs on all goods except energy from Canada to the U.S., 20% tariffs on many goods from China to the U.S. We import a lot of stuff from China, so obviously that's going to have an impact. 10% tariffs on energy from Canada to the U.S. and 25% retaliatory tariffs on up to $155 billion of goods from the U.S. to Canada, which is what Canada mentioned last night. China also is not wasting any time to start the retaliation. If you take a look at this right here, China has retaliated with new tariffs on the U.S. as the trade war officially begins. China said it would impose additional tariffs of up to 15% on some U.S. goods beginning on March 10th. Now, what does China mainly import from the United States? Agriculture. That is why Trump had to bail out the farmers back in 2018 to the tune of about $28 billion, because China stopped taking in our soybeans, our rice, a bunch of different things that we create in the United States, and farmers were left out of jobs, their businesses were destroyed, and that's where you needed Trump's money to come in back in 2018. I don't know if something similar is going to happen this time, but I mean, it's setting up to be very similar if China starts to largely tariff U.S. agricultural goods. Obviously, the farmers are not going to be in the best situation at that point. Is Mexico fighting back or being chill? So Mexico has not officially announced a retaliatory tariff. In my opinion, based on the Bloomberg article I read on Friday, it is likely that Mexico finds a way to appease Trump, and then maybe these tariffs get taken off by either tariffing China more, which is what Trump wants them to do, or by building or by buying more cars from the United States versus from Asia. That's another thing that Trump said he needs them to do in order to avoid tariffs, which gets to my next point. How likely is it that these tariffs actually stay in place? I think that's another big question that people need to ask themselves, because although the markets are pricing it in right now, obviously, as you can see with everything going red, that tariffs are bad. Does the market actually believe that these tariffs are going to last forever? I don't know. And I don't think anyone knows, but I think Trump is a negotiator at the end of the day. And if Canada and Mexico calls him up and says, hey, we'll do X, Y, and Z, can we get rid of this tariff stuff? I think in an instant, Trump would switch. It just has to be a really good deal. And in the meantime, to get that really good deal, there is obviously a lot of pain that the markets are willing to inflict, because no one wants to be buying equities when you're not sure what the implication of tariffs are going to be. I mean, quick example on how this affects SoFi. If tariffs make things more expensive in the United States, people might just not start spending as much in the United States. People might not be depositing as much money into their SoFi checking account. People might not be taking out a loan because they're afraid of the interest payments, because they're already strapped for cash, because they're spending so much on products, because everything starts to inflate in terms of prices. That's one scenario. It's not a perfect scenario. It's not the only scenario. There's other probably bullish scenarios in terms of how tariffs play out, but the market is looking at the worst case scenario. And as a result, they're saying, well, we can't invest in SoFi. We can't invest in Robinhood. How many people are going to be trading if we have tariffs that affect uncertainties in the market? Nvidia and SMCI, Nvidia, I think, should be prone to not having to deal with too many tariffs because they sell GPUs and they have pricing power and they have a pseudo monopoly. But if Trump doubles down on export controls with tariffs to Singapore, yeah, you've got more problems there. So every single stock in the market is somehow affected, even if it's a very minute way of being affected. And that's why we're seeing this red. And quite frankly, that's why I also think we're seeing a lot of algorithms take the market down. And if you're in the right names, I think you kind of just got to deal with it. If you're in crappy names, you have to reevaluate if those names are the right place to be. But it is one of those corrections that we're experiencing right now. And it's not really a correction yet. We got to go down another 2 to 3% for it to be an official correction. But it is one of those corrections that is fueled largely by tariffs, in my opinion. And that is the current reason why markets are getting hit as badly as they are right now. Let's listen to Gabriela Santos. She's actually one of my favorite analysts from JP Morgan, and get her take on what's going on with the markets. And then we will keep going from there.
Base case is still pretty solid in terms of earnings and margins and the economy and everything else. But you don't know at this point how all this is going to play out.
I think the first thing that we do have to appreciate in moments where there is a lot of change is the actual underlying momentum coming into this moment. And we ended 2024 with real domestic final demand growing 3%. We had been surprised over and over with the resilience of the economy, especially the consumer. And we had, most importantly, a broadening in earnings growth, with the Magnificent Seven growing earnings 15% in the fourth quarter, finally seeing margins start to improve again. So that's really, really important. This is a resilient economy with good momentum. That said, I think the markets are now trying to figure out exactly the decimal points for this year, which is a lot of function of a lot of cross currents in policy. And we do seem to be starting to see a cooling in the economy, but it's a cooling, it's not cool. So it's more just trying to figure out the contours around the edges. How does all this change in tariff and trade policy affect sentiment, affect CapEx, consumption, margins, revenue growth? How does the change in government spending also affect confidence, maybe employment? So how do all these different puzzle pieces fit together?
I wish it was just decimal points. And you're trying decimal points to the right.
That's right.
Of the
to
period.
The right. Yes, to the right of the period.
To the right of the period. When it starts affecting it, according to the Atlanta Fed, it's actually affected numbers to the left of the decimal point for GDP.
And that, to us, seems like a bit of a, we don't want to overreact.
This part is really important here. So yesterday, for those that missed the headline, the Atlanta Fed took down their GDP estimate from negative 1.5% to negative 2.8%. So they doubled the rate of contraction they think Q1 is going to experience in regards to United States gross domestic product. Here's why JP Morgan's opinion is that that's just not that serious of a headline that you should take to tank markets.
To what happened in 2 trading days is the Atlanta Fed GDP now went from 2% to minus 2.8%. So there are 2 separate artificial issues here masking that underlying change. The first related to the import surge that we seem to have had. We're going to get more trade data this Thursday. What seems to have happened is a big surge in imports of gold, which is the BEA does not include in its GDP calculation. So just a mechanical thing there. And then the second one is related to sentiment. There has been a big decline, for example, yesterday, ISM manufacturing, but that's soft data. We have to actually see what's really happening in the underlying hard data. That's why this Friday's jobs report will be so important. And I think it can be a relief for investors to see that our expectation is we're still creating over 150,000 jobs. So there is still a continuation of momentum. It's more of a cooling. It's not cool. And for us, the underlying momentum is closer to 2%.
If you are right, the administration could make the case that if it's decimal points, this is when you'd want to make some of the moves for the long term to correct some of the imbalances that they see, whether it's trade, whether it's the size of government, whether it's government spending. You might be just feeding into the impulses of the administration to do it now instead of some other time.
And I do think it's going to depend on exactly how much we see all at once. It is starting to pile
and how
up.
long it lasts.
And how long it lasts. I do think there is somewhat of a consensus in the market right this second that maybe especially these 25% tariffs on Canada and Mexico are not persistent. We'll have to see the scope of the change, how long it lasts, and whether it's just these more recent developments that's affecting negatively the supply and the demand side of the economy, or whether we start to get some of the other policy aspects that are actually pro and boosting the supply side and the demand side of the economy and how those two interact. I think for the short term, while there is still uncertainty about this, what we saw in 2018 is a period of multiple contraction to try to factor in these different possible outcomes. And then eventually, if they are persistent, maybe start to factor that into earnings estimates.
But
So I would say just two quick implications here. The first is really that we had been talking about going into this year, just taking a look at the portfolio drift that might have happened in portfolios, a lot more exposure to risk. I see you see bonds doing their job with yields moving lower, the ag moving higher, 2.5%. So having some real growth diversifiers in there. And then the second is not turning too much to the cyclical trade quite yet. It's too early for that. It's usually out of a recession. So for us, it's diversifying within the market, but much more of a quality factor tilt for now.
we're going to have.
So look, I think it's a fair point for what she's saying. Essentially, the TLDR of her argument is that if you were going to sell, the time to sell was 2 weeks ago. It might not make the most sense in the world to sell when everything's already down about 30%. At that point, if you are still up, then you're probably up because you invested in those names years ago, and that's why you're green, versus investing in 2025 because you'd probably be red if you bought anytime before today. So the question then becomes, how do you position the portfolio size? And quite frankly, based on what I'm getting from her, even that thing she said at the end about how it's not time to move to the cyclical trades yet, it's still time to be in the tech trades and the stuff you're in, is essentially JP Morgan is predicting that this too will pass, right? Their argument here is that if you want to position and get super defensive right now, the time to do that was 2 weeks ago. If you want to start selling tech, the time to do that was when Palantir was 125, not when Palantir is 80. Now, granted, if your average is $10 and you really are feeling nervous and you want to lock in some profits, then by all means, you should take your profits because obviously Palantir is still trading at a pretty extended multiple. But nonetheless, her argument is like, we've seen a lot of pain. The tariffs are still uncertain, but we don't know if they're going to actually happen. The Atlanta GDP estimates are like a catchy clickbaity headline, but that's not actually accurate in terms of the import and export data we're seeing in terms of a contracting economy, but rather an economy that just loaded up on goods and services before tariffs went into effect, which at this point was a good idea. I mean, if you're Walmart and you bought a crap ton of stuff or imported a crap ton of goods in December before March, when tariffs go into effect, you've saved yourselves probably tens of billions of dollars, right? So that is why that GDP tracker is being so negative. And then finally, the main point she makes is about the job market, which I think is going to be what matters on Friday. On Friday, we are going to see if NFP, non-farm payrolls, actually come in better than expected. That number, I think, is going to be one of the most important metrics because, look, if we add below 100,000 jobs, the R word is going to start becoming more prevalent. Why is the R word going to start becoming more prevalent? Because people are going to think, all right, if people don't have jobs and we have inflation that is heavy and we have tariffs, yeah, that's a perfect recipe for a recession, and earnings growth at that point should follow to the downside. Goldman Sachs is thinking we had 150,000 jobs. If we do add 150,000, Gabriela thinks around that 130, 150,000 as well, then that's good because we are still adding a substantial number of jobs, even though we're not adding 300,000 like we were back in 2022, or at that point it was 500,000 a month. The labor market is weakening, but it's not dramatically weakening, which means the Fed now is able to cut rates based on the idea that there is weakness, but they're not cutting rates based on an emergency reaction towards massive unemployment. And I think that's a really important nuance, right? Like if the Fed gets ready to cut rates because they see the 10-year coming down, they see general weakness in the economy, which is a precursor to inflation coming down, which is what the Fed wants. And I wouldn't say Jay Powell's been perfect on timing, but he's been better than I would say other Fed chairs. And definitely in September, I do think we needed that 50 basis point cut, and he gave it to us versus 25. I think he would be looking at everything that's going on in terms of weakness, not the stock market, but the actual weakness, aka ISM and PMI data that came out yesterday. And he's probably thinking, okay, inflation's still elevated. It's not at our 2% target. But if we don't cut right now, this is going to legitimately turn into a recession, which is why now the market is pricing in 3 rate cuts for the end of 2025. So, I mean, I think the one silver lining to all of this volatility is that if we can, and there's a big if, but if we can maintain job growth at that 150,000 level, which is why Friday is going to be very important to see what that number turns out to be. And we still have this general weakness because of the tariffs, which will increase inflation, but it'll also reduce consumer confidence, which will decrease inflation. And hopefully the decrease of inflation outweighs the increase of inflation. The Fed's probably going to cut because Jay Powell and the Fed are going to look around and they're going to say, all right, if we wait another year to cut, or if we wait till September to cut, we are going to legitimately have a recession. We are not going to have the ability for companies to have a cheap cost of labor to then be able to hire employees. And if obviously unemployment starts to come up rapidly, you're going to get a full-on earnings recession in the stock market because people won't have money to buy goods and services. So in the face of all this volatility, fear and greed right now is at extreme fear at 18. I think the bright side is that, and this is kind of JP Morgan's point, we are going to see more rate cuts and we are going to see more action on that 10-year coming down, which also should be good for mortgage rates, et cetera. Kind of a reset you need in order to get inflation to really come down. Inflation magically was just like normalizing in 2024. Now you're getting to the reality of, hey, you actually need some economic downturns to get inflation to come down. People have to stop spending money. And for the past 2 years, what has been the number one thing everyone has been saying? Wow, the consumer is so resilient. And it's been this kind of mystery, this enigma of how is the consumer so resilient in the face of all this bad economic data? Now the consumer might not be as resilient, especially based on what Target said, which we'll talk about in a second. The bright side of that is inflation will come down, rates will come down, and then hopefully the Fed can manage that dichotomy of keeping unemployment at bay while also keeping inflation coming down. But we're going to have to see if the Fed can end up doing that. Apple just made an announcement. You guys are saying right here, Tim Cook did tweet yesterday that he has some special announcement coming out. Did they already put it out yet? No, they didn't put it out yet. Okay, so this was the thing. Unless anyone has the actual announcement yet, I don't think it's out there. But it's going to be something about the MacBook Air is what it looks like. So they tweeted there's something in the air. Most likely this will be like a new MacBook Air. Or iPad Air, yeah. New MacBook Air and iPad Air. Okay, so no one cares about this. No one cares, dude. It's like, especially when everything's going to shit, it's like no one cares about a freaking MacBook Air. I feel so bad for the companies reporting right now because, like, no one cares. Okay, here it is. We got these. So Apple unveils iPad Air with M3 chip, and Magic Keyboard. Apple's introduced the iPad Air with the powerful M3 chip starting at $599. Okay, no one's buying this shit. I mean, some people might buy. Dude, I have this iPad. Dude, I don't freaking use this iPad. Probably because it's never charged. But like, I just having an extra screen. It's like, look, it won't even turn on because it's not charged. Like, I don't know. Maybe I'm just bad at using the iPad, but I don't know. I've never been the biggest fan of this product line anymore. But yeah, we got a new iPad Air. Hopefully that helps Apple at this point, trading at a 4. If Nvidia is trading at a freaking 25 PE, growing at 78%, and Apple is trading at a 37 PE that doesn't grow, there's something going on in the market. And either Nvidia is ridiculously undervalued or Apple is ridiculously overvalued. I'm still surprised Apple is trading at 238 with Nvidia at 104. We'll talk more about Nvidia in a second. But I mean, it begs the question, what the heck's going on in terms of how the market is perceiving these names? Anyway, so to wrap up this conversation, then we'll move on to Target. We need a lot of jobs on Friday to prove the labor market is weak, but not decimated. If that's the case and the 10-year continues to come down, the Fed, I think, is going to cut before they see the market collapse in terms of unemployment. I have enough faith in Jay Powell that he's going to realize that before we only add 10,000 jobs a month, we should cut if we're adding 130,000 instead of 170,000 expected. And I think Jay Powell should also be realizing that Doge is legitimately cutting tens of thousands of jobs from the government. So we will have unemployment go up. If that is the case and we get a cut before unemployment goes to shit and before inflation naturally comes down, which unemployment starting to go up should, as a natural inflection, get inflation to come down, and Jay Powell puts a cut in the middle of those two before they definitively go to the upside or the downside. That is where I think theoretically this market could be in a strong spot towards the end of the year, right? Because like you need to have rates come down in order to simulate the market, but you can't have rates come down that aggressively, or else you're going to have massive inflation. And this has been the problem for the past 2 years. Is like, how is Jay Powell going to manage this? And in 2024, he managed it pretty well. He waited till September. He gave us the appropriate amount of cuts, and we didn't have massive unemployment. Now with tariffs, we have a whole different angle, and he has a lot more to manage. But if he can manage it, then we're going to get, hopefully, I hate to say this because I know we haven't said it in a while, but a soft landing. The question is just going to be if that ends up playing out. Target, let's talk about Target. Here is the Target CEO on earnings. They actually said their earnings were pretty good, but they are worried about the consumer.
Target CEO Brian Cornell. And Brian, it's great to see you this morning.
Good to see you. Thanks for joining us.
So very strong numbers for the fourth quarter. What happened?
Well, I think the team delivered a really solid holiday season. And you talked about the results, but it was great to see the comp sales grow. It was driven by traffic, which was really important. And it was led by categories like apparel and beauty, really strong performance in toys and books. And our digital performance just gets stronger and stronger. Up over 7%, led by same-day services that grew over 25%. Our Target Plus Marketplace continues to perform really well.
All right, so we got that CNBC update right here. Mexico president says retaliatory tariffs coming on Sunday. So there you go, folks. We had China retaliate. We had Canada retaliate. Yeah, CNBC Live, Mexico president says retaliatory tariffs coming Sunday. Cool. So we got a three-way tariff war. Very fun.
So the team did a really nice job of connecting with the consumer during the holiday season. And we're just building on the momentum we've seen in recent months. That traffic growth, it's the 9th
2%?
straight month that we've seen traffic grow. And to see traffic up 2% during an important holiday season was a real bright spot.
So traffic is here. You guys are pretty optimistic about the full year, but you do have some concerns for the first quarter. And I think that might be what the street's reacting to right now. The stock is up by about 0.8%. So you always see some fluctuation right when the numbers come out. Excellent fourth quarter. Really good guidance for the full year, but questions about what's happening right now in the first quarter. First of all, what happened in February in terms of sales? What did you see?
Becky, I'll go back to something you and I have been talking about actually for several years now.
Yeah.
And it's just the state of the consumer. And I think we've seen a cautious consumer for quite some time now. You know, they're shopping carefully. They're making sure they're stretching their budgets as carefully as they can. We know that that's a consumer who's been looking for value, but is also celebrating the key holiday moments like they did during November and December. We saw that in February. We actually had record performance around Valentine's Day. A consumer wants to make sure they're there, they're in Target stores, they're shopping online. They celebrated that moment. But we also saw.
Could you imagine if America didn't have these commercial holidays? Like the Target CEO is literally saying Valentine's Day was a catalyst for us. Could you imagine if we didn't have commercial holidays in the United States? Like, I feel like our retailers would be in a lot more trouble. So thank goodness we have Valentine's Day to boost sales.
Extreme cold across the country. And actually, as we've seen temperatures warm up, for categories like apparel, we've seen a pretty good spike. But it is a consumer right now that I think is under pressure. That's not new news. You reported consumer confidence has taken a downturn in the recent weeks. And I think there is some concern about tariffs. And I think there's a number of Americans right now that understand what a tariff is and what it might mean for them. So I think that cautious shopping behavior that we've seen for quite some time now continued in February.
In terms of February, how?
Okay, so TLDR, consumers showing some weakness, and Target lowered their guidance for full year sales because of the lack of confidence they're seeing in the consumer, which is fair. You would expect they would do that. Their earnings actually were really good. I mean, they beat on EPS, they beat on revenue. So TGT stock right now, it's down 3% mainly because of that guidance. It was actually up in the morning at 127. It was down 2% yesterday. It was up 3% in the morning. Now it's down with the broader macro. Probably that guidance is being factored in. But Walmart said the same exact thing Target said, which is that, hey, we are feeling a little bit of uneasiness around giving you a good guide for 2025 because the consumer is feeling less confident. Target confirming what Walmart said only makes me feel more cautious about the state of the consumer. And I guess we'll see what happens in Q1 earnings. But two of the biggest retailers basically saying, yeah, these tariffs are not going to be the best for the consumer. So now it's a question of how long will these tariffs last. Let's get an update real quick right here on tariffs in China. They are officially going into effect, and then we'll keep going from there. We got 15 minutes till the market opens.
Necessary measures, countermeasures when it comes to their reaction. But this batch actually was relatively limited. Minutes after President Trump's tariffs had kicked in, China announced tariffs on the agricultural sector for the main part. This was 10 to 15% tariffs on imports of soybeans, sorghum, beef, fruits, chicken, corn, cotton, wheat. Some of the, in one case or in some of the cases, China is the biggest buyer of these products, such as soybeans and cotton. During President Trump's first trade war, China had also targeted agricultural products. And at that time, it was really seen as a political calculation that China would want to target President Trump's political base. Now, this time, the Chinese also imposed various business restrictions on more than 25 companies. 10 of them were added to an unreliable entity list, so they're blacklisted. 15 added to export control list. A lot of these firms are, for the most part, in the defense industry, don't have a whole lot of business in China, if any at all, and had already been sanctioned by Beijing. The one interesting company was among all of these was Illumina. This was the company that had been blacklisted in February after President Trump's February tariffs had kicked in. That company has now been banned from importing its gene sequencer machines, and China does account for 7% of Illumina's sales. That was the most high-profile corporate among the group, so it does give you a sense that we're seeing a lot of action, a lot of noise with these measures, but no household names.
Eunice, our Commerce Secretary was on a few moments ago, really emphasizing the element about fentanyl. And the Journal piece today reads, Chinese officials have said in recent weeks that U.S. tariffs make them less likely to help solve the fentanyl problem. Is that true?
So that's a really good question. And Howard Lutnick did just say that if countries show they can stop the flow of fentanyl, then the tariffs can come off. So that he said that in the morning, which is good, right? Because it shows you that the Trump administration is willing to get rid of these tariffs if they can get what they want. The problem is China is coming back and saying, well, if you put tariffs on us, it's really hard for us to feel incentivized to get rid of the fentanyl. So it's just going back and forth at this point. And eventually we'll see if there's a solution. But right now it's just a full on war.
Oh, well, for President Xi Jinping, he is not going to be like the Canadian or Mexican leaders, not going to be seen as somebody who would pick up the phone and try to work something out with President Trump and be seen as kind of bending the knee to President Trump, to the Chinese public. So President Xi would probably go to Trump on his own terms. And that is really important for the Chinese leadership to make sure that their public knows that, or at least believes that President Xi is in control.
Eunice, when it comes to some of these agricultural products, chicken, wheat, corn, cotton, 15% tariffs, are there other places the Chinese are going to be able to go to find those kinds of agricultural products at a lesser price? Do you know?
Yeah, definitely. They've been doing this. They've been diversifying since 2018. So they've been moving to looking at Brazil for the most part for, say, corn. They've been trying to reduce a lot of their reliance on the U.S. when it comes to these agricultural products. And that's expected to continue, especially in this climate.
Now, Eunice, I also remember, I'm sure we had a conversation around this at the time, when we reached, under the last Trump administration, there was a deal reached with China in some way that involved them buying a lot of agricultural products. I don't remember the exact target number, but I don't believe it was ever met.
Right. That has been one of the sticking points that the Trump administration, as well as a lot of other folks in the U.S., have said about that 2020 trade deal, the phase one trade deal. There's been some discussion, though, ironically here, that the Chinese will want to return to that 2020 phase one trade deal, that they would agree to buy a lot of U.S. products, not only agricultural products, but from their perspective, a lot of high-tech products, not something necessarily that the U.S. Would want to see. But there is this belief that the Chinese leadership does prefer going back to that kind of grander economic deal.
That's probably what the Trump administration wants to see as well. Here's the thing to understand about China, and this is not necessarily the same for Canada and Mexico, but definitely for China. China's economy is not in a good spot. So although Xi Jinping wants to seem very independent and his own type of guy, and he wants to be the guy that can stick it to Trump and basically say like, hey, you're not going to be able to control me. Xi Jinping is going to come to the negotiation table. He has to, because we know China's economy has gone to shit. We know that the stimulus is barely keeping them afloat. The only reason Chinese equities are pumping, quite frankly, is because the United States got too expensive and people were chasing some of the stimulus from China. I mean, Xi Jinping literally had to say, I like capitalism a week ago to get people excited about China. And this is a guy who doesn't really embrace capitalism, even if they have certain elements of capitalism, and he definitely doesn't publicly say it, but he had to say it to get more foreign investment to come into China. So it's not like their economy is amazing. Their economy is also messed up, and tariffs across all these goods are not going to be good for them either. So I think inevitably, just like in 2020, when they came to an agreement, there will be an agreement. Will it be in April? Will it be in May, June, July, September? Is it going to be tomorrow? Like, I just think no one knows when it's going to happen, which is why you can't really blame the market. I was talking about this yesterday in the market close. You can't really blame the market for taking stocks down. Like, there are certain times where we're like, oh, the market's stupid right now. It's like, I don't think the market's stupid right now. The market's just reacting to the Nvidia right here at 109. The market's just reacting to the level of uncertainty that they don't know how to make sense of. The benefit that retail investors have is that you're usually more long-term than the market, right? So in 5 years from now, theoretically, Robinhood, a SoFi, an Nvidia, these companies should be bigger than they are today, so you can withstand the volatility of March 4th for the gains of March 4th, 2030. But the hedge funds, they're not going to stick around for that, right? They're going to hedge their positions. They're going to take their losses, get out, get in as quick as they can. And so they're going to be a lot more emotional about it, but I can't really blame them for being this emotional given the lack of certainty that exists currently in the state of equity markets or in the state of assets in general. And I think that brings me to my next point, which is an interesting topic or an interesting tweet that was that was posted by Chamath yesterday. Real quick, before I get into that, here is a picture. It's a very elementary picture, but I think it kind of explains the cycle we're in. So we are at the part of the trade war cycle where the market sells off on trade war fears. Eventually, we will get to the point where officials report that progress is being made. This happens every time. Then we will get to the market rallying in hopes of progress. And then you will have either progress made or no progress made. And that's going to determine what happens with the market. But right now, we are at the point where the market is selling off on trade war fears. And that's just the nature of how we have to deal with what's going on in the market. But that is the point that we are currently at right now. And the market always sells off on trade war fears. Now it's not really fears because the trade war has started. So it'll be a question of if they do only turn into fears in terms of its escalation over the coming months. On top of that, we also have the European Union, which announced Rearm Europe. It is a plan to unlock 150 billion euros in loans for European nations to boost defense spending. This is bullish. This is very bullish. This is not bullish for Lockheed Martin. It's definitely not bullish for Raytheon. I think it's bullish for Palantir, but we'll see if Palantir can mend their relationship with some of these European countries. It is really bullish for all the European defense contractors that we talked about yesterday that are up 30 to 40% year to date. So European defense, ironically, was the best place to be in in 2025. Not Nvidia, not tech, not American defense, because this 150 billion in loans for European defense contractors means that Lockheed Martin and Raytheon and L3Harris are not going to be getting 150 billion dollars of demand from European nations because those countries are going to spend on their own defense contractors. So, I mean, European defense companies definitely doing well off this, especially with this new Rearm Europe plan. But it is a bit of a headwind for American defense companies. Now, again, I think Palantir can benefit from this because I don't think that 150 billion is just going to guns and ammunition. I think it's also going to go to software, but it's up to CARP to be able to get into the right rooms with Germany, France, etc., and get those deals to happen, which hopefully they will, but eventually we'll find out over the coming months. All right, so here's what Chamath said yesterday. I know everyone has their own opinion of Chamath. I'm not the biggest fan of him. I respect him in certain respects. I don't respect him for a lot of the stuff he did with the SPAC stuff, so I get it. But I still think we can read his take and have a basic understanding of what he's trying to make right here, which I think is actually a decent argument. So let's read through this and let's kind of discuss what he said. He said, number one, Trump is more popular with young people than old people. Most young people don't own stocks or homes, aka they are asset light, which is a fair point. I think we can agree on that. Number two, Trump is also most popular among working class and middle class folks. Most of these folks are also asset light. That is true. Most working class people are not stocked up with millions of dollars of stocks. It stands to reason that a fall in asset prices, aka stocks down or home prices down, have very little impact on his core constituents. To that end, I won't be surprised if Trump has little reaction then to an equity or home price market correction. Separately, the upside of shrinking these asset prices is that it gives the folks mentioned above a legitimate chance to buy into these markets at lower levels, aka buy the dip, making equity ownership and home ownership more possible. Tangentially, if Trump figures out how to get rents lower, he will unite young people and asset-light working people into a reliable voting bloc for the foreseeable future. He will have given them the trifecta: cheaper stocks, cheaper homes, and lower rent. Said differently, don't presume the stock market going up is a useful barometer anymore. In fact, it going down may be a better signal for his popularity. Time will tell. I think there's some problems in this thesis, but I thought this thesis deserves to be talked about because it's kind of what Kris on the Market Open has been saying over the past couple of days as well, which is that Trump, essentially the TLDR of what Chamath is saying, is that Trump wants to tank the market. If he tanks the market, you get asset prices that start to go down, stock prices and equity and home prices. Because of those asset prices going down, his core constituents, which a lot of you guys in the chat own assets, right? And some of you guys might have voted for Trump as well, as you own assets. You are not the majority of the demographic that voted for Trump. The majority of the 78 million people or whatever that voted for Trump probably don't even own stocks outside of their 401k. Like they probably don't even care about who Jerome Powell is. And so Chamath's argument right here is that all those people are not really going to get the pain by the market going down outside of the people that are asset heavy, like a lot of us that are here in the chat. And so it's an argument that says, okay, if the market were to tank, which again, Kris has been pointing at this many times, and Trump then becomes the savior by getting the 10-year to come down, mortgage rates to come down, interest rates to come down, and then, Meta goes back to 500. From 640 to 500, it hurts. But Meta at 500, if it goes back to 620, that makes a lot of people happy, whoever bought in at 500. I don't think Trump deliberately is trying to do this. I don't think that's the argument. But I think a byproduct of what he's doing with tariffs and the general economic uncertainty that he's putting out into the world, which he knows is bad for the stock market, but he thinks is good in the long term. The byproduct of all of that, Palantir right here down 4% in the pre-markets, is assets go down, equities, crypto, and stocks. Now, again, I think Trump does want to see these things go up. And I disagree with Chamath on the idea that it's not a barometer. I still think if the market really takes a beating, Trump's going to be upset and he's going to do whatever he can to make it come back up. But the point is, if it takes a beating and we're down 20% and then it starts rallying from those 20% lows, that's where I think he believes he's going to get all the credit. And so from that perspective, it's just another idea that's out there that maybe Trump doesn't fully care about the market taking a shit if he cares a lot more about tariffs and having a competitive advantage against our adversaries, et cetera, et cetera. And also the byproduct is that if you don't have a ton of assets, you have an opportunity to buy assets when they get really cheap. And then you get to ride them back up towards the latter half of his administration. Now, granted, there are some problems with Chamath's thesis because one argument you can make is that young people are starting to have more assets. So Chamath's first point is that Trump is more popular with young people than old people. Most young people don't own stocks or homes. Young people are starting to care more about assets. I mean, a lot of young people own crypto, even if, they own some meme coins or whatever. And if those things correct, that could definitely be a situation where they blame Trump for that correction, which I think a lot of people are starting to associate Trump with a lack of a golden age in America. And that could turn him off to a lot of people. So I think there's a lot of nuances to the overarching thesis, but it is a sort of original argument that I haven't heard before outside of Kris basically saying that Trump wants to tank the markets in order to rebuild the markets. And although it's going to piss off a lot of people that are in assets, those that are not in assets, maybe they get introduced to assets if they end up getting so low, which also begs the question, right? If you're not in the market, just because the market tanks 20%, do you really get excited about the market or do you start telling your friends, oh, it was a scam, I told you so. Look, the market is down 20%, right? And so I guess we will find out in the coming months if that ends up being true or not. But nonetheless, March 4th, we got 10 seconds until the market opens. It is a bloody day. It looks like it's going to be a bloody day. Maybe we get a little bit of a rebound. We're going to see. But as of now in the pre-markets, we are definitely experiencing some red. March 4th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. Nvidia is down 3% as we open up on the day. 110.71. Nvidia is down. It was down a little bit worse in the pre-markets at 108. So we'll see if it gets any level of a green candle rebound. 111 on Nvidia. SoFi 1313. That is a rebound from 1289. Palantir, that's a rebound from 78 at 81. Robinhood 4576. That is a rebound from 44. So we do have some green candles across the board, even if the equity prices are still red. Grab is down 3%. HIMS is down 4%. HIMS now down below 40. Tesla 273. That is up from 270 in the pre-markets, but that's still down. Taiwan Semi, they announced a $100 billion deal with Trump yesterday for investing in the United States. They're going to build 5 more fabs in Arizona. 177 on Taiwan Semi. That's up 2.4%. That's interesting that Nvidia is down and Taiwan Semi is up. I guess they're reacting to that news that came out yesterday, but I would have expected all the semis to be down while Nvidia is down. Apple goes green. Again, someone makes sense of Apple trading at a 40 PE, not growing, but Nvidia trading at a 25 PE, growing 78%, because I can't make sense of it. But nonetheless, that's what we're seeing right now for Apple and Nvidia. Nvidia right here, 112, down about 1.7%. So again, getting a little bit of a rebound from 108. The Qs are down 0.5%. IBIT is down 3.8%. Ethereum's at 2,000, basically back to the price it was before that Trump crypto reserve tweet. Crypto 82,000, Bitcoin 82,614. That's down about 1% on the day. Target is down 3.4%. Target goes red. Amazon is below 200. Wow. Amazon, I think it makes sense why Amazon's getting hit this bad. The tariffs affect Amazon the worst out of the Max 7, I would say, because Amazon has a lot of stuff they sell on their website from China. So yeah, makes sense. Makes a lot of sense that Amazon's getting hit. So there you go. Amazon right there below $200. And that one is not too pretty. Let's look at the other Max 7. Apple's the only one that's green. Microsoft down another. Wow. Microsoft 380. Dude, Microsoft is now negative over the past year and a half. Microsoft's one of the only Max 7s that really has not shown any growth. Meta 642, that's down 2%. Googs 168, that's down 0.5%. Amazon 200, again down 2%. Nvidia trying to hold 110, but it's kind of rocky. 111 right here, down 2%. And then Tesla 272, that's down about 4.3%. Currently right now. Where is Palantir? Palantir is at 81. That's down 2.5%, but it's at least holding that 80 level. The S&P 500 is down 1%. We were down 2% yesterday. So that's 3% for the past couple of days. The S&P 500 for the year is now down 1.3%, which again is not crazy. If it's the start of something really bad, then yeah, we're going to see some more pain, but we are not even down 5% for the year, which is hard to even imagine. When it's not even a pullback, right? It's a pullback from the highs, but if we're measuring it on a yearly basis, we still have a lot more room to go down if the pullback has just started, or maybe that proves the point that because we fell so much from the highs on the S&P already at 6,200, that maybe we're normalizing here for a bottom. I guess we're going to have to see, but a lot of it depends ultimately on what Trump does with these tariffs. Roblox right here is down 3%. SoundHound is down 10%. The speculative names today are probably getting hit. All the quantum names are down 7 to 8%. Color's down 5%. Oklo, this thing was at $60. Now it's at 28. Obviously got cut in half as fears on the AI CapEx trade are also happening. MicroStrategy down about 4%. Big Bear AI now below $5. This thing was almost $10 at one point. Archer down 4%. And SoundHound down 9% on the day. VIX is approaching 25. Wow. Yeah. Well, that makes sense. Yeah, there you go. VIX is at 2403 right now. It's up 25% in the past 5 days. And in the past month, it's up 40%. So, I mean, if you had calls on the VIX, you've done very well. But playing volatility to the downside has obviously been tough for a lot of these equity names. The semiconductors, ironically, some of them are green. Qualcomm's green. Taiwan Semi's green. ARM is green. I guess it's kind of a rebound from yesterday because they got hit so bad. ASML is green. SMCI is green. AMD's red, 97. Nvidia, kind of close to going green on the day, 50 cents away. I don't think anyone trusts the Nvidia bounce. We're going to have to see if it lasts till the end of the day, but you do have some buyers that are finally stepping in on Nvidia and saying enough is enough. And we're seeing a little bit of green, 40 cents away from seeing if we can hit 114. That would be green for the day. Dell now 94. That's down 1%. Micron down 1.7%. ARM again 121. And then Lam Research right here, 75.52. That is down as well. Chris CRM says, admit for what it's worth, tech bottom 3 to 6 months before the market bottom and also before companies announce big layoffs. That is a fair point. I think the question is going to be, have we seen the bottom for the NASDAQ? The NASDAQ right here at 493. And I don't know. I think Nvidia obviously has become ridiculously cheap. Apple has not. Tesla, although, like, you know, if you're a long-term bull on Tesla, it's always cheap. But like, is Tesla actually cheap? Obviously not, right? Given its extended multiple. So do we need multiple compression across Tesla and Apple to really say the NASDAQ has become cheap? Because those are two big parts of the NASDAQ. I think Nvidia's cheap. I think Google's cheap. I think Meta, you could argue it could go down another 10% given it's up 10% for the year, but I still think Meta is cheap right here. I wouldn't be surprised with a 10% correction. Amazon, I would say, is cheap, but it's not. Amazon is one of those companies that's always a little bit more expensive because their margins aren't that good, right? And so even though AWS is amazing, that's not the majority of the business, or that is a good part of the business, but that's still the majority of the business is e-commerce, which has crappy margins. So like, yes, Amazon at 200 is definitely not the most expensive. Is it the cheapest? Absolutely not. I mean, Nvidia is cheaper than Amazon right now, which says something, right? Given Amazon is a much more global brand than Nvidia right here. So it is kind of crazy to see how it's playing out, but nonetheless, I don't know if tech is bottomed. I don't know if tech is bottomed yet. I don't think anything is bottomed if we're going to have more retaliatory tariffs, because every day, China, Canada, Mexico, they announce something. The market's got to factor that in. And it's tough to factor that in. Okta right here is up 15%. So they had a great earning and they went green yesterday. Enterprise Identity Security, that one's holding up. Is Nvidia green? Nvidia is green. All right, cool. So we're getting a little bit of relief here on the day. Nvidia holding up. VST and VRT are probably going green as well. Those are Nvidia proxies. Yep, VST is up 1.4%. VRT is up. Well, VRT is still down 2.3%, but that has a green candle from $80 now at 83. Here's the question, right? Like, is the market legitimately saying, all right, 110 on Nvidia, enough was enough, we're buying in because it's freaking Nvidia? Or is this a dead cat bounce? And I mean, I would be lying if I had the answer to that. I don't think anyone does, because every time, really for the past 2 weeks, you felt there was a bounce, it ended up retreating because of some headline that comes out. So I think the Singapore headline is nonsense. I know that's what tanked Nvidia yesterday. I think that's stupid, dude. I think even if they crack down on Singapore, Nvidia is going to be fine. Their growth is going to be fine. Maybe they're not growing 75%. Maybe they're growing 71%. Like, that's not going to get the market to sell off Nvidia. I think what's selling off Nvidia is just the general uncertainty of tariffs, plus the idea that the CapEx AI trade is cyclical. I think it is obviously cyclical, but it's not cyclical, at least for the next 2 years, in my opinion. So I think Nvidia has plenty of runway. And the biggest Nvidia bulls think it has way more than 2 years of runway. So I think it's just the market scared. And I can't blame them for being scared, but the question is going to be, when do they think enough is enough? Taiwan Semi goes green. That's up 4%. Maybe that was a precursor to Nvidia going green when we saw TSM going green. Tesla trying to go green, about $7 away. HIMS down about 3%. Grab is starting to go more green. It was down 4%. Now it's down 2%. Amazon again, 201. Nvidia, 114. Nvidia trying to make its way to 115. Palantir holding up. Wow, Palantir goes green, 83.44. Palantir goes green. Thoughts on Nubank? I like Nubank. I'm not buying it here. Their growth is phenomenal, but they have problems with Brazilian currency exchanges. And so the other reason I'm not buying Nubank is I just don't know enough about Brazil and their currency problems. And I don't think you have to be an expert on it to buy Nubank. I think you could buy Nubank just given the growth is amazing and you could have a long-term trajectory on dealing with the Brazilian currency stuff. But I kind of want to know exactly what it's about, which is why I haven't bought it. But if you understand it's a short-term headwind, which it probably is, then I think Nubank is not the most expensive stock out there in the market, and you get some more international exposure. Qs are down 495. They're recovering a little bit, down about 1/3%, but they're still getting hit. Bitcoin just had a nice little candle, which is nice to see. Bitcoin right there, 84.5 from 82. That's a $2,000 candle. That is not a bad candle. But is this sustainable here right now? Let's ask this poll right here in the chat, see what you guys are thinking. Poll is very simple, which is bear trap or nah? Bear trap or not? Is this a bear trap? ADA is pumping. Yeah, we got all the cryptos pumping. XRP is pumping. Solana is getting a little bit of a bid right here as Bitcoin gets to 84. It's funny that Bitcoin's basically at the level that it was at before the Trump tweet. It lasted like a day, and whoever sold into that strength, congrats. But if you held, then you're right back to the same levels. Nvidia back to going red. Wow, look at that. 115 it got to, then it just got hit at 115, back at 113. This is incredible. This is incredible, dude. There's like, you can't trust anything right here. You cannot trust anything outside of your covered calls printing, given this type of volatility. I mean, we're going to have to really see some trends to see if this stuff can stick. Palantir 82.75. We got the market going red now. Target down 5%. So their consumer guidance obviously was not the best for the market. S&P 500 down 0.75%. Tesla down 3%. GitLab at earnings yesterday. Are they up? GitLab. Are they up? Where's GitLab? Okta's definitely up. That was a good one. GitLab. Yeah, they're up 3%. So at least companies are able to kind of go green after a good earnings. And the macro is not absolutely killing them, but you do have some green right there. TSM, again, still continues to be green, up 4%. Verizon's green, and Google just went green as well. T-Mobile's down. Celsius is down 4%. DJT, we don't talk about that stock too often, but that one's down 2.6%. Meta's down 2.7%. MicroStrategy is actually going green based on Bitcoin moving. CleanSpark still down 2%. IBIT's down 2%. Ethereum up 2.7% with Bitcoin. And AMD at 97.91. That one is down currently on the day. Amid what happened with the 50x long Bitcoin position. So for those that didn't hear about this, someone went long with leverage on $200 million of Bitcoin and Ethereum literally an hour before Trump announced the tweet, leading people to believe that obviously that person had inside information that tweet was coming out. In my opinion, that person probably sold into strength, because if Bitcoin were to fall 3.2% below where they entered, they would have lost $200 million. So unless they thought that Bitcoin would just keep going up after the Trump tweet, which obviously that hasn't happened, they're down a lot of money and they got liquidated badly. But if they sold into that 95,000 Bitcoin, they probably made a lot of money. I guess we'll never know. But yeah, definitely someone, in my opinion, took advantage of insider trading at that point. People say it was Eric Trump. I mean, it could have been Eric or Barron Trump. Who knows, man? It could have literally been the Trump's kids. I mean, to go in with that much leverage, with that much certainty too. I mean, you had to be so dead positive that there was going to be a catalyst, or you just have to be the biggest gambler in the world. And I think with 200 million, I mean, yeah, like you could gamble with 200 million, but there's probably some level of strategy that you're deploying there if you put that position on an hour before the Trump tweet. And that just sounds like insider information. Like it has to be. So who was that insider, right? Is it one of Trump's friends? Is it his kids' friends? Is it his kids themselves? We don't know, but the fact that I'm even talking about that happening is insane, but that is the reality of what we're seeing right now. SoFi is down 6%, 1276. If you are a big SoFi bull, do not read Steve's article today, because Steve definitely had a little bit of not a bear case on SoFi, but he is bringing some concerns, and he had a rating downgrade on the name. So if you like Steve's articles, I'll put it in the chat for anyone who wants to read it, but he has some concerns with what's going on with the tech platform. Still bullish, but he's not thrilled with certain aspects of SoFi. Did they sell at the highs? No one knows, right? No one knows if that person who was 200 million leveraged, 50x leveraged, if they actually sold at the highs. Like, I mean, maybe certain people can go through the blockchains and figure out exactly what the address did, and maybe we'll get an update on that. But from my understanding, I think they sold as soon as the momentum was, the catalyst came out, and that was it. If they actually held, hoping for like 100,000 Bitcoin on this news, then yeah, they've been completely wiped out at this point. Robinhood below 44. We have new lows on Robinhood after earnings. This is an official new low on Robinhood. That is down. The low was 44, 44.10, I think. Now we're at 43.75. We are $3 away from the low 40s. The one thing I can say is that this was the most obvious one that was going to take a hit if the market was going to take a hit. And this is because if you know Robinhood, you know that they are reactive to trading volumes. And if trading volumes go down because the market goes down, Robinhood will go down as well, as much as I love Robinhood. So this one makes sense that it's getting hit this much. I'll be curious to see if it can get below 40. That would be very interesting if it actually gets taken below that. I would think the S&P would have to fall another 2 to 3%. On Friday, we will get news on if Robinhood joins the S&P 500. I don't think it's happening this Friday. I think it's happening in June. I would be shocked if it happens this Friday, primarily because I don't think there's been enough option flow to kind of bet on the position. Usually people know if it's going to happen and they take pretty massive bets, like they would buy the $50 call or the $45 call or whatever. We haven't seen any of those option flows. We've seen those for August, not for the month of March. So, and we saw that with Palantir. I mean, people really loaded up before it happened on Palantir. So I don't think we get in on Friday, but if we do, I'd be happy I'm just not betting on it. I mean, what's your strike and expiration on Hood Leap? So the ones that are in the money are $15 and $20. The ones that are out of the money are $95 and $100 for 2027. The ones that are in the money are 15 and 20 for 2026, which hopefully those don't get out of the money. Hopefully Robinhood does not get to $20, but we'll see how this plays out. Robinhood right here, 43.93. S&P 500 now officially down 1%. Palantir down 2%. Nvidia not being able to hold on to the green. It's still red. VRT is red. Vistra is red. Nubank is red, down 4%. The Qs are down 0.5%. Grab is down 3%. Tesla down 4%. SE had earnings today. They're a competitor to Grab. They're up 6%. They had a great earnings. It's proving the Southeast region in Asia is doing very well. You would think Grab would kind of get some momentum on that news, but the macro is taking it down. SE right here, C Limited up 6% currently right now. Bitcoin at 84,000 on the day. SaaS companies are all red. CrowdStrike does have earnings today. This is going to be an important one later today. The companies that have earnings today are CrowdStrike, ChargePoint, and we already talked about Target. Those were the main companies. So CrowdStrike after the bell will be very important. This one's down from 450 now at 378, down 1.13%. All the SaaS names are down except Intuit, Zscaler, and GitLab. Those are green. Twilio, ServiceNow, Adobe, MongoDB, CRM, Salesforce, wow, below 300. All of those are getting hit. Trudeau is having a press conference at 10:30. Okay, we will tune in to what Mr. Trudeau has to say. He's probably going to be addressing the tariffs, most likely. And we'll see his retaliation on the tariffs. Enphase is at 53. Enphase is green. Enphase is now up 5% over the past 5 years. The stock was $320 back in 2022. Now it is at 53. It has just been a disaster when it comes to the solar thesis, which I think still will be alive over the long term, but we're talking really long on that long term. I mean, it's just tough to see, especially with tariffs, that people get that excited about solar. So 53.85 on Enphase, that's up 1.85%. Enphase is ridiculously cheap if you believe solar is going to come back with a vengeance over the next couple of years. But if Trump's going to drill, baby, drill, and oil prices continue to go down, which, by the way, oil prices are at $67 a barrel right now. Yeah, it's hard to imagine that solar gets the biggest catalyst. Take a look at that, dude. 67.59. This is good for consumers. This is good for inflation. This is good for input costs because every company indirectly benefits from oil. However, you can't have this price go to absolute garbage, right? You can't have this thing go to 60. I think that's the number, 63 to 64. If it goes below that, then the oil companies start missing out on some pretty big profits. So I think 67 to 70 is reasonable. But if it comes down, to the low 60s, that's when a lot of the oil companies are going to start to question what's going on. XLE, the energy ETF, that one is down 1.5%. That makes sense. That one's getting hit. XLF, the financial ETF, that is down 2.5%. So financials taking it on the chin today. JP Morgan, wow, down 4%. JP Morgan down 4% here on the day. Nvidia slightly green, trying to hold on to its green. It's trying to make its way back to 115. It's got to really hold it for the market to believe it stays. But look, that's the other thing with buying the dip, right? So unless you really love some of these prices, if you're buying the dip for the hell of it, right? Just be like, all right, things are cheap, I'm buying the dip. That appetite is gone, I think, for a lot of people because they don't know when the dip stops dipping. So if you're buying Nubank right now down 4%, it's probably because you love Nubank. You think Nubank is ridiculous at basically $10 and you don't really care what the market says. You want to get exposure to Nubank. But if you're a general market participant who's looking at Nubank's growth and you're like, wow, this growth is phenomenal. Why is this company down, 50%? And then you think of all the tariff volatility. You're like, well, maybe it can go down even more. And you just don't buy, right? And you stay away from buying. And I think that is probably one of the things that's happening right now in the market as well, is people are just like, well, Nvidia 114 looks cheap, but it could go to 104 and then it's really cheap. And it just keeps people away from the market. The only way to reverse that psychology is when everything starts running, right? Because if Nvidia goes to 121 or 125 by next week, everyone's like, oh man, I missed it. Nvidia is just one of the most amazing companies in the world. What am I doing? I need to buy in. And then you get everyone that starts chasing it, and that helps support the stock as well. But if it doesn't have that run, it doesn't create that FOMO. It doesn't create that momentum. It just stays stuck and probably gets hit even worse. Now, granted, a lot of you in the chat are more experienced and you've been investing for a while. You're probably DCAing. You probably have an auto DCA set up, which is, in my opinion, the kind of right way to play it out. But for people that are just like interested in beginning to buy certain names, you kind of don't care if 1281 is cheap on SoFi if you can get this thing at 1080 versus 1280. And so you'd rather wait. SMCI going green right here, up 2.5%. Block going down 5% on the day. Jack Dorsey's company continues to have some headwinds. Costco is down 1%, only 1%. Seems like not that bad given this market. Intel's down 4%, SoundHound's down 7%. Lennar is actually up today as a home builder. And again, JP Morgan right here down 3.6% on the day. Doug says you're going to have to refill the strategic petroleum reserve eventually. Biden emptied it and then neglected to refill it. So eventually Trump is going to have to buy. If he gets to buy at oil prices that are lower, then that actually isn't the worst thing in the world. But yeah, he probably will have to start buying soon. Where is Tesla? Tesla's at 268. Tesla's officially below 270, down 6% on the day. ASTS had earnings yesterday. They were up 7%. Again, I don't know much about this company, but they reported an 18-cent loss, about $2 million in revenue. So they're trading a lot more on narrative and future deals. Company is worth about $8 billion right now. 2767, that is up 8% on the day. Rocket Lab is down 4%, 1798 on the day. Tesla 269. It is a new low. Tesla's now down 44% from the highs of 487 back in December. Ugly, ugly market, but it is the current market that we are living in currently right now. Bank of America said that the imports don't really subtract from GDP. ISM shouldn't affect GDP either. Soft January spending is a drag on first quarter growth. That was their response to the Atlanta Fed. They also said the first quarter GDP tracker is down from 2.3% to 1.7%, largely due to a higher than expected January imports print. So Bank of America just came out and they said, hey, the GDP number that's freaking everybody out, that's basically because of imports. It's not something to freak out about, which I think is a fair point. But nonetheless, if we do see negative GDP growth in Q1, people will probably get a bit more scared. Nvidia right here going red again. It's gone red and green like 10 times today, and it's only 952, 113.79 on Nvidia. S&P officially down more than 1% today. Now 1.10%. Palantir only down 1%. It was down 5%, so it's holding up at 82. But it is down. Apple goes red, SoFi still red, and then Target now down almost 6% on the day. Yeah, we're red, folks. We are red. Did Trump end the 7,000 EV tax credit, 7,500? He did not. He did not. And I hope he doesn't, because I said yesterday that my dad's thinking of getting a Tesla. And my dad is not going to buy it. Or he's not. My dad's warming up to letting me buy him a Tesla and like pay for it. He has too much ego to let me do that, but I'm finally getting him to let me do that. But he's not going to let me do that if we don't get that tax credit, bro. He's going to be, he's going to say, fuck it, let's get a Civic, you know, but we need that tax credit. Also, speaking of Teslas, dude, Tesla came out yesterday and they said 0% APR on the Model 3, which is amazing. So, well, it's amazing for us, but it's, I forgot to mention this during the beginning of the show. It's definitely bad for Tesla, dude. If they're giving 0% APR, that means sales are not going that well. That's a fact, bro. That's a fact. Like if Tesla's bringing out 0% APR, that means they're not selling as many cars as they thought they were going to be selling. They would be selling. And as a result, they're trying to incentivize people. Now, here's the thing. What they need to do, this is my advice to Tesla. They're probably not going to take this, but I hope they do. They need to bring back 0% APR on the Model Y. If they bring back 0% APR on the Model Y, which is the car my dad wants, he doesn't want the Model 3, they are going to get a lot of people buying that car because the Model Y is one of the best Teslas ever. Even if they have this new Model Y, my dad doesn't care about the new Model Y. He is perfectly fine with the old Model Y. If they give us 0% APR on the old one, they're going to get a lot of sales. Now, granted, are their margins going to be that good? No, because they're reducing the price theoretically by giving you 0% APR to buy it. But still, it would at least increase volumes. And if Q1 is turning out to be a crappy quarter, which is probably why in the last month of the quarter, they're introducing 0% APR to boost their sales. I think if they did that for the Model Y, that would be really good. But we got to see if that ends up playing out. I bought a Model Y at 0%. Yeah, I bought a Model Y at 0% as well. I think a lot of people would love to buy a Model Y at 0%, but that needs to happen. And if that doesn't happen, then, you know, I'll be curious to see how much of these 0% APR on Model 3s actually incentivize people to buy those cars. Now, I know a lot of you guys are saying, well, Elon also needs to stop being political. I think that's something that's just not going to happen, dude. I think after observing Elon for, I would say, the past couple of years and more intimately over the past couple of months, just kind of studying him, understanding who he is, watching a lot more of his interviews, he is who he is. He's not going to change. He is not going to, if anyone's in Tesla expecting Elon to not be political and not be gung-ho about the AfD party in Germany or whatever, Elon has got to a point in his life, and I think from watching some of the Joe Rogan clips as well, that this made me more evident to this assumption, where he doesn't give a fuck anymore. He's 53 years old. He's made all the money he wants to make. He's had all the success he could possibly have. I think he's at the point where he genuinely cares about his ideas being actualized from a political perspective, and he really doesn't care if that means there's short-term pain in the context of his companies, especially because Elon has a very long-term trajectory on his companies. I mean, this is a guy who said Tesla's stock price was too high on Twitter 3 years ago, and the stock tanked like 10% that day when the CEO came out and said, yeah, stock's too high. Like, I like, his net worth is down, what, 100 billion over the past month? I don't think he cares. I really think Elon just cares about free speech and protecting democracy, even if you think he's not, he's doing the opposite of that. Like, he cares about his ideologies. And so if you're in Tesla, I think you got to be okay with that. And if you hate that and you think Elon's just going to ruin Tesla, I think it's time to sell, because there is no way in hell Elon's going to start becoming a good boy who just focuses on his business instead of politics, because he is way off the edge when it comes to that. Now, granted, I think robotics and FSD outweighs all of his, concerns about democracy, yada, yada, and eventually that'll play out. But if you think Elon's going to stop talking about politics, I just think that's, I mean, he bought Twitter literally to keep talking about politics. So CJ says, please stop being an Elon apologist. I am not an Elon apologist. It's so funny. Half you guys think I'm an Elon fanboy. Half you guys think I hate Elon. I am just saying it as it is. I respect Elon. I admire Elon. I don't agree with Elon on everything, but I am also pretty objective about the fact that Elon is going to be political. And if you hate that, you got to sell your Tesla, because then what's the point of being in Tesla if you think that politics are determining the nature of the stock price? I think politics affect the stock price, but I don't think politics are the only reason for why the stock price is down. I think if we ship 50,000 robots next year, the stock price is not going to be as down as it is today. But everyone has different perspectives on what happens when it comes to Elon. Here's Howard Lutnick on CNBC. He just did a take. Let's see what he had to say, and then we'll keep going from there.
They don't like tariffs, and they've been, sometimes they're nice to, or positive about some of the moves with President Trump, but sometimes negative. They've never liked the tariffs. They got a piece today. Cross-border, some parts and cars go back and forth 8 times across the border. They're going to be taxed every time, or tariffed every time. There's an estimate, Anderson Economic Group, that 25% tariff will raise the cost of a full-size SUV assembled in North America by $9,000, a pickup truck by $8,000. You wouldn't want to have that on very long, would you?
Can I ask you a question? Why do cars that are sold in America get made in Canada and Mexico as opposed to being made here? Seriously,
Right. Part of it
if
is
you
the
want to have
USMCA,
a
the
trade
last Trump
conversation,
administration.
why shouldn't American
You can't
jobs
just wave a
be
magic
here?
wand and move everything immediately. This is going to take
Secretary
time.
Lutnick, a big part of this was because of what was negotiated under the last Trump administration with the new NAFTA USMCA.
And USMCA, the president has been crystal clear that he thinks that Michigan and Ohio, the communities of Michigan and Ohio, they've been ravaged by these ideas. And the concept is, let's bring that production back. I've spoken to the car manufacturers. They have ample excess capacity in America, and they can move that production back. I agree with you. They can't do it in 3 months, but they can do it in 6 months. And you're going to see jobs created in America, cars in America. You build it here, you don't pay any tariff. And that starts on April 2nd. But today, we've got to save lives. But on April 2nd, I think you're going to see a reordering and negotiating with our trading partners and trying to make the world fair and reciprocal. You guys have no idea how bad the deals are that America suffers with. Everybody charges. Like you just said, imagine dairy is 250% in Canada. You guys don't think about that stuff, but it's unbelievable the way we get ripped off around the world. And Donald Trump's going to level set it, make it reciprocal, and make it fair. But you can't kill Americans and get away with it. You just can't.
We do want to reward friends, and I don't know whether you say punish our enemies, but what is China? Are they friends? Are they enemies? Are they a security risk? Are they the biggest, second biggest economy on the planet? It's symbiotic. Howard, how far do we want to push that, and how bad? I mean, how much pain are we going to be willing to take in inflation if all of a sudden they hit us right back?
Remember, so you made one comment. So inflation comes from a government printing more money. Some prices can rise. This bottle of water.
It can't happen at all.
No,
from tariffs.
Tariffs do not create inflation. Printing money creates inflation. You have a balanced budget. There can't be inflation. It doesn't mean one product could be more expensive and one product could be less expensive. But China, I'll give you an example. China has the highest tariffs in the world. In the world. Everything gets tariffed in China, and they don't have inflation. In fact, they have deflation. India, the second highest tariffs in the world. They don't have inflation. So this concept is just people whining and complaining and not being truthful. The fact is, we need to protect America. Why does China tariff everything and we give them a free ride back here? And they subsidize the opioid production. They subsidize opioid production.
Can I just ask you very quickly, the American Automotive Policy Council president just put out a statement on the tariffs. He said, we continue to believe that vehicles and parts that meet the USMCA's stringent domestic and regional content requirements should be exempt from the tariff increase. Our American automakers who invested billions in the U.S. to meet these requirements should not have their competitiveness undermined by tariffs that will raise the cost of building vehicles. Is there a chance that they would get an exemption?
Well, look, that is a discussion. The president's always thought about that, right? About USMCA. But this is, remember, the problem is this is an opioid-related tactic today. We need to have opioids stop flowing into the country. On April 2nd, we're going to re-examine trade policy, but that comes April 2nd. And we understand that there are production in Mexico and Canada. But let me ask you a question. Why don't you go ask those auto manufacturers what percentage of their parts are made in America? And it would shock you in a negative way to say that many of the cars that they think produced under USMCA have less than 10% American parts. Less than 10%. Right. We've got to bring this stuff to America. It's got to be produced in America.
We're going to get Kris on the show. Kris, I'm sending you the link. Let's get Chris's perspective on this. Look, here's my take on what he said. Okay. I'm curious what other people are thinking as well. I have a very simple take. I don't even think my take is going to be controversial here. He wants everything to be produced in America. If everything is produced in America, doesn't everything get more expensive? And doesn't that mean we don't want to buy this shit anymore? Because it's like no one wants to buy stuff that's like 50% above where it usually trades at, because most of our stuff comes from the rest of the world where there's cheaper labor costs. And if that's the case, doesn't that increase inflation, or doesn't that also decrease the ability for consumers to want to buy this stuff, which ends up hurting the economy? Like, it's very nuanced, and I'm not saying he doesn't have an argument around why we need to have reciprocal tariffs, etc. But the problem is they're advocating for all this American-made goods, when in reality, how many Americans can afford American-made products? And I think that's the conundrum that we're in right now, that eventually we're going to have to try to find an answer to. Kris, good morning. How are you dealing with this market volatility?
I'm fine with it, man. Dude, this guy just lied on air.
Okay, hold on. Right. But before you go, I just want to warn the audience.
Yeah.
I am a bit more neutral and biased on this show. Kris is a guest. This is not Kris's show. Kris is allowed to have his opinions and be more political and isolate 50% of you. So for the 50% of you that get isolated because of Kris saying whatever he's going to say, just know that Kris might piss some of you off. Also, Kris, can you turn off your phone in the background? You get a ton of emails, and I'm sure you'll be on for like 20 minutes.
This dude just lied. He just lied right there on the spot. And I hope people recognized it. Basically, he just said, okay, so the Trump administration in in the 20 in the first term signed the USMCA, right, to make things fair. Now all of a sudden this dude's coming and saying, no, it's still unfair. It's still unfair. Oh, no. It's the drugs. That's why we're doing tariffs. It's the drugs that are coming across the border. Bullshit, dude. I call 100% bullshit because number one, if that was the case, you wouldn't go after Canada, which barely has any opioid issues coming through the border. No, this is a tactical way to basically crush inflation, and he just let it out. This dude, did you notice 5 times he said, oh, we're going to re-examine April 1st. We're going to re-examine April 1st. What does that tell you? If you're leaving the door open for re-examination, that means that you don't actually give a shit about what you're trying to say right now. All you're trying to do is put fear, doubt, greed, all that stuff into the market. Market crashes, inflation crashes. Now the 10-year crashes. You refinance the debt. The deficits go away. And now you've got yourself a nice, healthy growth pattern for the next 16 months. But these guys can't, 16 to 24 months. But these guys can't come out and openly say it.
So let me summarize what you're saying. You're saying the USMCA agreement that Trump signed during his first term created the ability for us to import and export certain things from China, Mexico, et cetera, and cars were part of that. On CNBC, they say, hey, why are we going against our own agreement? And Howard Lutnick diverts the conversation to say it's about fentanyl, while not acknowledging the fact that we are the ones who signed the agreement in the past Trump administration, and then he said the tariffs can be removed, meaning he really doesn't care about the tariffs in the first place.
Exactly. You can't. Okay, he just left the door wide open for the tariffs to be rolled back because clearly they have no intention of keeping these tariffs permanent, right? Which, in my opinion, means that, hey, this is just a political ploy, basically, So in the short term, right now, they want to crush inflation. So they're basically coming out with the most retarded policy statements possible to basically get the consumer to calm down, stop spending. Right now, the market's tanking. I'm sure the consumer's recognizing this. That's why you're seeing, even with all the tariff talk, the bond market is signaling to everyone lower inflation is on the way. Look at that 10-year. Yeah. It's literally for the last 6 weeks, all 6 weeks that Trump has been in office, has been moving downward. If the market thought that these tariffs were going to basically be permanent and cause inflation, the 10-year wouldn't be collapsing on itself right now. It would actually be going the other direction. Follow the bond market. So, in my opinion, these guys are doing whatever they have to do to basically, crater stuff so that they can recover it later and be like, look, we got everything we wanted. We got fentanyl, we controlled immigration and we got fentanyl off the streets and all this other BS that whatever they're talking about. So I think they're trying to combine economic policy with social policy all at the same time. But every single department right now is gearing towards taking as much liquidity out of the market as possible and redirecting that liquidity towards those treasuries. I put up, if you go to my Twitter, you'll see something very, very interesting. There's a chart that I put about U.S. debt maturities coming due in the next
it's like 10 trillion, right?
So now keep going down. I'll show you which one. Go. That right there. So you see all that debt that's coming due that has to be refinanced this year. This is a ploy to basically crater the 10-year as much as possible so that they can take that debt that's maturing this year, refinance it at lower rates, probably around the 3s, right? So you need the 10-year to crash to 3, right?
Hold on. This makes a lot more sense. So they have $7 trillion they're about to pay in the next 6 months that they have to put up the money or refinance. And Correct. If you refinance, obviously you want lower rates, which is probably why Trump does not care about the market tanking, because if that can get rates down, that's all that matters, right?
Yeah, because now you have all this gap. You see that gap between 35 all the way to 39. You can basically term out that debt, but you don't want to term it out right now by issuing a ton of 10-year treasuries and pay 4.8% on it. You want to pay 3%. So right now, if you're willing to basically crater things, you'll be able to refinance that debt, that 7 trillion that's coming due within the next year, term it out to like 3%, right? Because new issuances will be coming around there. So this is
that also explains why Besant has kept saying that all he cares about is the 10-year, right?
Exactly, dude. Exactly.
I think that chart is the whole story about this market volatility, to be honest. If they need to refinance 7 trillion at 3% or lower, or 3.5%, you have to get the market to crash, right?
Yeah. Yeah. Right now, everyone is doing that. All this money is flowing from the equity markets to the bond markets. Okay. Now, why is it flowing to the bond markets? Because everyone is scared of the equity markets. Everyone's like, sell stocks, buy bonds, sell stocks, buy bonds. So what do you think is going to happen? The 10-year treasury is going to keep coming down. I mean, if you also look at the other chart that I posted, within literally the last 30 days, okay, look at the amount of rate cuts that's being projected out, right? Not that one. There's one that I posted more recent.
Oh, this one. Yeah.
Yeah. Look at the amount of rate cut increases on what's happening. And there's one more that I put just like a week ago. Look at that. Not a week ago, like today, actually, or last night. Scroll. No, up. Right there. No, that one right there. There you go. So if you look at this chart, you can see this is only 30 days, okay? So you're talking about from February to now. Basically, in February, everyone was expecting what? 0 to 1 cuts, right? Look at that 400 basis points to 425. That went from literally being 35% now down to less than 10, okay? While at the same time, that 3 cuts and the 4 cuts, look at that sharp rise, okay?
Right.
So this is the key. Now the ball is in Jerome Powell's court, basically. So now Jerome Powell is going to be handed a question. Look, the economy is tanking. Stocks are down. People are cutting back on spending. Inflation numbers in the next probably 60 to 90 days are going to reflect a massive amount of pullback on consumer spending. And at the same time, that's going to cause a deflationary headwind. So now Jerome Powell's going to say, well, you know what? Now I have all the ammunition I need to start the cutting cycle, And if the cutting cycle stays persistent, and I think it will, because the other thing that the Trump administration did was get the Saudis and the OPEC members to raise production. So energy is collapsing right now. So if you look at oil prices are 67, like you just mentioned, right? Oil controls a ton of inflationary pressures. So when you have high energy prices, that bleeds into the rest of the market. But then that also means that bleeds into savings for a lot of companies when you have cheaper energy prices, So my thinking is this is a tactical move that the Trump administration, Doge, all this stuff is happening probably for the next, I would say, maybe 3 to 6 months. But after the 6-month mark, they're not going to be able to keep this up, because at that point we're in recession, and it's going to be hard to get the market to kind of like bounce off of that. So right now, I think they're willing to endure some of the pain very early on, so that this way they can successfully refinance a lot of the debt, give a lot of confidence to basically people, like basically that, look, we what's the word, that we solved, or at least we kept our promises with the whole fentanyl thing. So this is all politics, dude. It's all politics.
Do you agree with what Chamath said last night?
About?
Oh, you didn't read it. Chamath basically said Trump's trying to tank the market because people that don't have assets will be able to get assets. And Trump doesn't care because the majority of his base doesn't really own stocks or real estate.
I don't know about all that stuff, dude.
That's kind of your theory as well, though. You said Trump wants to tank the market to save the market, right?
Well, I think what Trump is trying to do is tank the market so that inflation comes down. And if inflation comes down, then the interest rates come down. Like, interest rates are a huge headwind for growth, So the longer, and the other problem with inflation is that the longer inflation persists, it becomes embedded into the system. So basically, if you as a business are expecting 3 to 5% interest, you're going to be spending based on that 3 to 5 interest expectations. Employees are going to expect a 3.5-4% raise every year, which means inflation is going to be embedded into the economy. So you want to get inflation down, and you want to get it down quick. Unfortunately, this didn't happen like during what is that thing called, like September, October, November, and December. And if inflation had come down at that point, then we wouldn't have to deal with all this stuff. But we couldn't deal with it. So right now we're on a point where I think this guy is thinking both strategically, and I think all the people around him. I mean, these are capital allocators. These are guys who've run hedge funds, so they know how to manipulate the market to get what they want. The only thing that I would probably caution a lot of people on is this is just a theory, and I don't know if this is just someone being retarded. Okay, but in my opinion, there's probably a higher chance that this is not retardation, because there's enough people on his team that know how to manipulate the markets to get the end result that they need.
So a lot of this you were thinking is politics, and they're mixing in the social policies of fentanyl, immigration, yada yada, with economic policy. So here's my question to you: do you think that is the right strategy for this administration?
I don't know, man. I have no idea. Like, in my opinion, this is just manipulation of the markets via people. And it all comes down to also, what is the end goal here? Trump is termed out. He doesn't have a second term to run anymore, right? So politically, he doesn't necessarily doesn't care nearly as much. But he's in a really tough situation, because if his policies don't work out, it's going to cause the Republicans to lose the midterms, and basically both the Senate and the House. And then it's going to be 2 years of investigate Trump again, right? You remember that whole nonsense? And I'm sure he doesn't want to have that bullshit again. So I think right now he understands that this is early in his administration. If there's pain to be had, right now is the time to have it. This way he can capitalize on reacceleration and actually prosperity in the second half of his second half of the first half of the term, where now you've got job growth, you've got inflation down to manageable levels, and interest rates coming down, housing affordability to come back to normal again. That's the other thing people have to remember. Right now, a lot of people are wanting to buy homes, and they can't, because interest rates are 6-7%, and a lot of people that are sitting on properties, they can't move either, because they're sitting on 2.5-3% mortgages. So if they were to move now, automatically they would end up paying way more in the new mortgage. So one of the things is, I don't know if you saw the interview with Scott Bessent, where he said that the next few months, the housing market's going to start unlocking. Remember that? Can you put that up?
Yeah, we should watch that. I have that saved. That's a really good point right here. So everything Kris has been saying, for those that want the summary, is essentially we need the 10-year to come down, because we have to refinance a ton of debt. In order to get the 10-year to come down, we essentially have to tank the markets to get inflation to come down, rates to come down. And this is basically what Scott Bessent said this morning as well.
We've been talking for about a year and a half about your visions on the economy so far. What do you want the president to include in his speech from your department?
Well, Brian, President previewed his speech with some of the cabinet members yesterday, and he's got so many accomplishments. On the economic side, I think thus far, one of the biggest wins for the American people is since Election Day and since inauguration, mortgage rates have come down dramatically. Both the level of the 10-year bond and the spread between the 10-year and mortgage rates, which I think is an effect of the bank deregulation we're going to do. So that, I anticipate.
Does that affect credit cards too?
Well, the interest rates will affect credit cards. It'll affect auto loans. And the bottom 50% of Americans over the past 2 years have gotten crushed by these high interest rates. So we're set on bringing interest rates down. And I think that's one of the great accomplishments so far.
And also, when you talk about energy, you guys are doing this, making it clearly a focus. Is the market looking at what you plan to do with energy and reacting on the promise of what you're doing? Because you've only been there, 7 weeks?
Yeah. So, Brian, markets live in the future. There's a futures curve, and the market understands President Trump's plan for energy dominance. And the Secretary Burgum, Secretary Wright, the super strong members of the cabinet are following President Trump's priority for drilling, unleashing U.S. energy, crude oil, natural gas. We're going big in nuclear, and we are going to, it's going to bring down costs, but we're also going to become major exporters of energy, which will make the world more secure.
Because Japan wanted our natural gas, we weren't giving it to them. Europe wants our natural gas, we weren't producing it, but we were capable of, but for somehow the green focus on the previous administration won over.
Well, Brian, yesterday, President Trump, they have sent out a truth that said that the European Union has paid more for their energy bill to Russia than they've given to Ukraine in aid.
How could they do that? Because there's a ban on that. Are they doing it through third parties?
No, that's the pre-existing nat gas and things like that. Those are the pipelines, and you can buy it. You can buy Russian energy as long as you're adhering to the price cap.
So tariffs.
So I think that's your point, Kris, right? That essentially, if they focus on continually getting that 10-year down, they can refinance, and that unlocks the mortgage market as well.
Yeah, I think that's the other thing. As interest rates come down, now more people are going to be actually able to buy homes, but there's also going to be a lot more people be able to sell their homes so that they can transition to another home. I mean, right now, there's a ton of people that are locked into their current homes that want to move, but they can't afford that interest rate difference. You know, closing that interest rate gap will make a big move towards helping people, you know, transition from different housing levels that they want. Like, imagine right now you're an older person, you're living in New York and you want to retire, move to Florida. Well, you can't, because you got a 3% mortgage in New York and you're going to inherit a 6% or 7% mortgage in Florida. So you're like, you know what? I'll just stay put. But if the price of the mortgage comes down and at the same time it's, let's say, 5% or 4.5%, now you can say, you know what, I'm giving 1.5 points away, but I'm able to save a whole bunch of money by moving down to Florida. So let me go ahead and do that. You know, so I think we're seeing that happening. I think there's a ton of people also that are in a position where they want to buy a bigger home, but they can't because, you know, they'll have to basically pay more for their mortgage. People want to downsize. They can't do that because they'll have to pay more. So closing that gap will hopefully increase a lot of inventory, and you're starting to see that inventory increase throughout different states in the country. And I think that will spur a huge amount of inventory increase in housing, but then also transaction volumes. Because if you look at the transaction volumes right now of housing, it's like at multi-decade lows. So that resurgence in buying and selling should be an economic stimulus there also, you know? So there's, like I said, this is all, in my opinion, this is all part of the plan. At least that's the theory that I have. I am not selling anything that I have. I'm just holding tight. I'm very well positioned to basically capture the upside when it does happen. But in the short term, this is not good. It doesn't feel good to be in this market. You know, you're gonna have these like moments where you want to wake up in the morning, look at your portfolio, and you know you're just disappointed. Don't do that. Right now is a time to basically just woosah and relax. You know.
Do you think there is any appetite for people to buy the dip here, or do you think everyone's just like, screw this, I'm gonna wait?
No, I think slowly but surely people are stepping in. Like the good barometer for me is look at SMCI right now. It's like holding okay. Google right now, even though it's down, it's not down by like crazy amounts right now. So there's definitely value. People who have capital that are, you know, like what's the word? Counter contrarians. They are stepping in and buying the dip, but they're not doing it in like a rapid fashion. They're not going crazy with it. The one thing I'm telling you right now, we're going to revisit this. And I think you should save this. We're going to revisit this. Watch what happens April 1st. Watch all of the bullshit that Howard Lutnick just basically came out and said, blah, 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 fentanyl, fentanyl, fentanyl. All that shit is going to get reversed, and they're going to make a deal because, you know, Trump is quote unquote the president with the art of the deal. And then we're going to have like a nice summer of recovery, right? We might deal with more pain 30, 60 days from now, but 10% corrections in the market, they happen. Okay. They've happened multiple times throughout the last 15, 20 years. This is nothing that should shock anyone. I don't think that there is a credit problem, which is usually what causes major crashes, right? Where companies are either over levered or consumers are over levered. And then there's a trigger that happens where it causes a ton of people to default on existing things. And then that ends up bleeding into the rest of the economy. The consumer, in my opinion, right now is relatively healthy. Unemployment is low. So we're not dealing with all of that stuff. You know, unemployment could tick up a little bit higher, but there's still a lot of room before we get into the point where unemployment becomes a huge problem. If there is an existential threat to the credit markets, then you've got a major problem. But as far as I can tell, that's not the case. And even if we did see some level of credit issues coming up where, let's say, delinquency rates on certain, you know, certain things go up, the Fed has the ability to cut right now, which is not the ability that they had 2 years ago or 3 years ago when the interest rates were 0%, right? Right now, the Fed has room to come in and basically save the market. So I think right now we need to calm down, relax, understand that, you know, if you're in a good, high quality company that's making money, nothing has changed other than people's sentiment. And sentiment is the best time to buy, is because people are just scared and selling you things at a good deal, you know?
Are you at all worried about non-farm payrolls on Friday?
No, I'm looking at least 60 to, I mean, I'm looking at least like probably like 6 months out. And from what I can tell, as long as that 10-year treasury keeps coming down, that is bullish long-term for stocks. Okay. That means that future financing of debt is going to be cheaper. Future financing of debt becomes cheaper, is easier for growth. Consumers are going to be able to borrow money at cheaper prices in the future. Okay. Whether that be for housing and for other things. Right now, if you look at credit card rates are in the 20 something plus category. Interest rates come down, consumer credit can pick up, you know? So I think right now we have to keep things in perspective. As long as that 10-year keeps going down, there's a better chance that we're going to see a nice, steady recovery in the second half of this year and probably in 26.
So then, okay, so if non-farm payrolls are okay, let's assume 150,000, and inflation still is elevated, but it's not super coming down, but we know that it's going to come down if we have all this pain in the broader economy. When do you think Jay Powell cuts? Do you think he waits to see the unemployment rate massively go up, or you think he actually does it on time?
He already started cutting without cutting. Did you notice that by any chance?
Oh, with the quantitative easing?
Right. Where basically now he's no longer rolling off treasuries. That in itself is acting like a cut, right? Imagine right now selling 10-year treasuries and the Fed is selling them at the same time, you know? So no, I think, look, first and foremost, Scott Bessent has Powell's ear. They work together, okay? Look at that fear and greed index. This is perfect, man. This is literally like, this is Max Payne. People have to remember the darkest times are the best times for recoveries to happen, right? Like, I feel like I'm about to give like Churchill's speech, like during D-Day, like we will fight them in the river, you know.
Oh my gosh, dude.
So
it's so funny because it's only affecting investors, bro. Like the average person doesn't know what the hell is going on with tariffs and equities, but all of us are like, oh my God, we're like at war right now, you know?
Yeah, and we're basically off what, like 6% off all-time highs. Like, come on, guys, just woosah a little bit, man, woosah. So just chill, ride out this thing, and you know what's a good thing to show, Amit? Look at the fear and greed index, and basically just show like these are literally the freaking absolute bottoms before these V-shaped recoveries.
Yeah, August 5th, we were at the same
right?
level.
17, boom, it jumped to what? Extreme greed mode again. Right now we're at lows again, right? So there you go. Just relax. The VIX is spiking right now. The market's not. Oh God.
Well, okay. So to play devil's advocate here, I agree with what you're saying. Is there a world where you think the woo-saw becomes not as woo-saw-ish because shit really hits the fan? Like, is there a world where extreme fear goes to like 1 instead of 18?
You know, I'm gonna quote Crossroads. I'm hoping he's watching this. He has one strategy that I'm absolutely in agreement. He's like, when RSI is below 30 and there's no like pandemic or nuclear war about to hit us, buy the dip. And I think it's the same thing right now, right?
Yeah.
Where I think there's just so much fear in the markets. Let it do its do its thing, and just relax. You know.
Yeah, I think people that are really struggling are people that are over levered right now.
I was just going to say one thing. The key here is make sure you're in solid companies that are making money.
Yeah.
Okay. Because they can weather the storm. They can, like Google can weather the storm. They don't have any issue with demand problems or anything like that. They can weather the storm. Tesla can weather the storm. Okay. They're a big company. They make a ton of cars. You know, people buy those cars. They make profit on those cars. So if you're invested in a profitable company right now, don't cry and be like, oh, I'm down 20%. No, they make money. It's fine. You know, now if you're in some bullshit speculative company that basically only makes money when speculation is super high, yeah, you got to maybe like worry a little bit. So right now, high class your portfolio. Get all the shitty companies that are not making any money, that are likely to go bankrupt in the next 6 to 12 months. If no one puts in any additional equity, they will not survive. But the companies that are like exceptional performers, bro, easily these are times to buy the dip.
Yeah, I mean, and I think that's been true throughout history, right? Like if you're in the right name, you have to deal with market volatility. Now, if you're in something that is a function of a euphoric bull market, like Fartcoin or whatever, you know, like or like yeah, which is
yeah, I mean, bro, if you're invested in companies that are just pure speculation or asset classes that are pure speculation, you know, you're going to be, the chances of a recovery are slim to none. But if you're in profitable companies that can buy back their own shares, that can reinvest in future growth prospects, or even if they have, like, let's say a ton of debt on their balance sheets and can refinance that debt at cheaper prices, you're going to be fine. You know, like look at Verizon right now. Like yesterday's comment about, oh, Verizon has 50 billion dollars in debt. Okay, but their cash flows are strong, and at the same time, these interest rates are going down, which means their debt servicing costs go down. That's good for a business, you know? So I think that's the thing to keep in mind. So right now, apply some Peter Lynch, find those companies in your life and in your market that you know are strong, profitable, growing, are going to benefit from rate cuts, buy them, even energy prices, buy them and just chill. And you'll be happy 6 months from now, and probably more so in 18 months from now. So,
all right, Christopher Patel, thank you for the thoughts. We all appreciate it.
I think sometimes everyone just needs a little bit of a fucking like pep talk when things are down. Like I feel like this is like halftime. Everyone's like, "Oh my god, we're down." Like we're only down by a couple of touchdowns. Relax, buddy. You know, like we're still the fucking New England Patriots from the 2020s. Relax there, buddy. 2010s. So yeah.
Yeah, and I think the chart you showed about the refinancing of debt, I actually had it. I've heard of that argument, but that chart really laid it out that, yeah, it makes sense, bro. If we're not going to pay $7 trillion off in 6 months, we need to refinance it, and the lower the rates, the better, which means you need some volatility to get those lower rates.
Yeah, that's it.
All right, Chris, thank you. Chris's Twitter right there in the chat. You guys can follow him there, and we'll talk to you later, Chris. We appreciate it.
Take care. Have a good one, guys.
Have a good one. All right, Trudeau is not live yet. He will be live soon, and then I'll go to Trudeau and we'll see what he has to say. He likely will be talking about the tariffs, but yeah, dude, that chart that Chris showed, man, that's a hell of an argument right there that kind of is making the point, right? If we have to refinance all this debt, we need lower rates to refinance it. You know, it's ironic. I didn't know Chris would bring up this topic today, but I was on the US debt clock yesterday, you know, that website, and I was just looking. I mean, let me show you guys right here. I was just looking at what is our debt expected to be in 2029. So right now, we're at 36 trillion, right? I didn't know there was this feature on the website where you can go into the future. By 2029, we are expected to have 47 trillion in debt. We're going to collect about 7 trillion in federal tax revenue and 47 trillion. So that would be about 9 trillion more in the next 4 years if we don't do anything about our spending. Now, Doge, on the optimistic angle, Elon says can cut 2 trillion, which again, that's got to be like amazing execution to get there. If Doge, even let's assume Doge does 2 trillion, okay, we'll be at 45 trillion in debt, right? Like we're still going to have tons and tons and tons of debt. And you know, honestly, looking at this type of a chart, it makes you nihilistic. It makes you lose faith because like we're never going to get out of this debt. And then it makes you question, well, does the debt even matter, right? If the debt is like this big, obviously it does matter. But it also makes you think, what are the more unique out-of-the-box ways we can solve the debt? Obviously, to Michael Saylor, his argument is Bitcoin as a way to solve it. Maybe that'll work, maybe that won't. But it does make you wonder how insane the debt structure is of the United States, and the fact that it likely is not going away anytime soon. Yeah, that's actually right. He's not cutting $2 trillion from the debt. He's cutting $2 trillion from the deficit. That's correct. I misspoke there. He's cutting $2 trillion from the deficit. So our deficit in 2029 would be closing in on that $3 to $4 trillion mark, which if we were to cut $2 trillion from that, that would be obviously amazing. If Doge can actually execute that. Right now, Doge has so far saved $165 billion. Also on this debt clock, they show you the amount that Doge has saved, which is really cool because I don't think Elon owns this website. So I guess whoever owns the website worked with Doge to like set this thing up. But you've got Doge right there, the Doge clock. That's 162 billion in debt that so far they've saved just by canceling a bunch of contracts and stuff like that. So, I mean, look, Elon wants to get that 162 to 2 trillion. It's going to be hard, but if they can get it there, that would definitely help the deficit. But the debt obviously still will continue to increase. Trudeau is not live yet. Trudeau is not live yet. I think he's about to be live. It looks like they're getting really close to it. They're zooming in on the camera. So as soon as he goes live, I will show you guys. But he's not officially live yet. A lot of you guys are saying the Doge tracking is BS. From my understanding, all it is in terms of the Doge tracking is the contracts they have canceled, and those are public. So it's not like they're going into the IRS and they're taking away money and therefore they've quote unquote saved money. Everything Doge has saved, from my understanding so far, is literally contracts they have not renewed, leases on apartment buildings they have not renewed, etc. Which is pretty easy to track because if you're not going to renew a DEI contract for the Department of Agriculture, which yes, we were paying for that stuff, then that's technically a savings, right? Because you're just not paying that anymore. So you're just canceling those savings. The more nitty gritty stuff that he has to do, obviously, is going to take some time to see if that ends up playing out. We're waiting for Trudeau. Until we get Trudeau, let's listen to Saylor. Yesterday, he was live talking about his Bitcoin thesis. And then as soon as Trudeau is on, we will go to Trudeau.
You've met with members of the Trump administration, cabinet, family members, I think the president himself. So are you involved in advising around this strategic crypto reserve?
I've met with a bunch of senators on the Democratic and the Republican side, a bunch of Congress people, a few members of cabinet, a few members of the administration, and anybody that wants to talk. You know me, for the last 4.5 years, I'm willing to talk about Bitcoin to anybody, anywhere in the world, every day.
Yes, and we appreciate that, talking to our audience about it. So were you surprised that in the announcement over the weekend, the president mentioned other smaller coins like XRP, Solana, and Cardano, as well as Bitcoin for the Strategic Crypto Fund?
I'm not surprised. I mean, I think there's no way to interpret this other than this is bullish for Bitcoin and is bullish for the entire U.S. crypto industry. You know, there are conservatives that view the right path forward is just a Bitcoin only policy because Bitcoin is a commodity, an asset without an issue, or a neutral asset, and there's no controversy. But the president's adopted a more liberal economic policy, and that's his right. He's president of the United States.
Yeah, no, I'm sure you would have preferred it, though, if it was a Bitcoin only fund.
You know, I believe that the best thing for the country is to move forward with an enlightened, progressive policy toward digital assets.
So right there, Saylor became compromised to me. Did anyone actually hear what he said? CNBC host is like, wait a second, wouldn't you rather have a Bitcoin only reserve versus like this shitcoin reserve that they're coming up with? And Saylor says, well, blah, 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 blah. To me, he's basically saying, I'm in with the Trump administration. They're going to do whatever the hell they want to do. And I'm not going to talk bad about them because if I do, like overall, the digital assets framework that I want to get passed is not really going to get passed. And I need to sort of be on the good side of the Trump administration. And he's basically admitting that, like, yeah, they're going to grift a ton of these stupid coins. But as long as we get Bitcoin in, that's all that matters. Because the most famous clip of Michael Saylor is what? There is no second best, right? There is no second best. And so, like, for him to say there is no second best, and now he's like, well, it's okay to have all these other coins. When I mean shit coins, I don't literally mean those are coins or shit. I just mean compared to Bitcoin, even Saylor would call them pieces of shit, right? Like Saylor says there is no second best. For him to now be open to those coins, to me, is basically him saying, all right, there's nothing else we can do. If the Trump administration is going to go down this route, they have to go down this route. But obviously, he probably would want only Bitcoin instead.
I think it's worth $100 trillion to the United States. And ultimately, there's 4 different assets that people need to come to grips with. A digital commodity like Bitcoin, an asset without an issuer backed by digital power. A digital currency like a stable coin backed by a fiat currency equivalent. A digital security, an asset with an issuer backed by a stock or a bond so we can tokenize Wall Street. And then a digital token, which is an asset with an issuer that's backed by digital utility. I think everybody's trying to come to grips with that taxonomy. And as the market gets more educated, we're going to see more progressive, constructive policy engagement.
But as it relates to the crypto fund, I guess, one thing people are going to try to figure out, and what the White House is going to have to explain, is why we need that. I get that you think the price of Bitcoin is going up sharply, and you've definitely put your money where your mouth is, but it is still a speculative asset. So is it just about investment gains for the U.S. government, or is there another strategic reason, say like oil, we have that, where we would need this?
The key to keep in mind is that Bitcoin is not competing with the dollar. It's competing with international real estate, global equities, expensive money managers on Wall Street, and any long-range investment that somebody makes. And so right now we're about $2 trillion in Bitcoin. It's going to 20 trillion, then it's going to 200 trillion, then it's growing 20% a year. And that capital is coming from overseas. It's coming from China, from Russia, from Europe, from Africa, from Asia, from the 20th century to the 21st century. So what's compelling about it is if the United States takes a position in the emerging crypto economy, if it buys up 10, 20% of the Bitcoin network, we're going to pay off the national debt. And so why wouldn't that be in the interest of the United States?
I guess the question would be, we're dealing with instruments that historically, Michael, have had drawdowns of you name it. I mean, 20, 40, 50%. How much risk, or what would that do to sentiment if, in fact, that was a paper loss, even momentarily, for the government?
I don't think anybody's ever lost money in the Bitcoin network holding 4 years. The United States' best investments are Alaska, Mexico, California, and Louisiana. And Manhattan. We're still holding them hundreds of years later. It's a nation state. So presumably you want to buy Bitcoin, you want to hold it for 100 years. You know where the future's going. The AIs, the foreigners, the Europeans, the 20th century capitalists, they're all going to cyberspace. And so the United States has the ability to buy this for a nickel and pay off the national debt. It'll be the greatest economic program of the 21st century for this country.
How do you think it gets funded?
I mean, I think that I'd leave that to the president's working group. They'll eventually decide what they want to do and the scale they want to do it. There are a dozen people on it, the head of the Treasury, the SEC, the CFTC, Commerce, the Attorney General. The president, I'm sure, will opine.
Yeah.
I'm sure you'll have leadership from Tim Scott and French Hill, both the Republicans and the Democrats. Everybody's going to have their opinions. It's above my pay grade to decide. But what I would say is this. We bought Manhattan for 60 guilders. It was a good trade. We bought Alaska for $6 million. It was a good trade. We paid $40 million for 75% of this country. It's a good trade. We can afford it. We should buy the future.
Well, there you go. That is Saylor's thesis. You obviously are free to disagree with his thesis. I know a lot of people probably do. He thinks this market is going to 200 trillion. Just to give you an understanding of how much the equity markets is worth, if I'm not wrong, it's about 340 trillion in the United States. So the fact that he thinks crypto can go to 200 trillion, I mean, he's obviously asking for a massive reversal in terms of the paradigm of where capital is allocated. Fear and greed is now at 14, well below where it was on August 5th. So we are definitely feeling some pain right here. Trudeau is not live yet. He should be live in, hopefully a couple minutes, and then I'll switch to him, but he's not live yet. But Saylor's thesis is Bitcoin is the way to resolve all the issues that we have right now. I don't know, bro. I don't freaking know. I like Bitcoin. I don't know if I like Bitcoin to be leveraged the way Saylor is leveraged at it, but it's either you believe in that thesis or don't. It's the paradigm that people engage in. Let's read some super chats before Trudeau goes on. Daphne, thank you for the super chat for $10 a minute. I appreciate your objective views as much as and how much you work to bring us all as many different views as possible with all the BS out there. You are a breath of fresh air. I appreciate it. I know that in these volatile times, probably 50% of the chat thinks I'm a liberal. 50% of the chat thinks I'm some MAGA Republican. I try to not really take a side. I try to give some opinions here and there. Obviously, I have my own biases, but I also try to give both perspectives. Like I think when I was listening back to the Ukraine Trump press conference, Zelensky Trump exchange, I think I tried to stay as objective as possible because A, I don't want to pick a side. B, I don't think anyone is nuanced enough to pick a side. C, that's not my job. My job is to bring the actual analysis, give a little bit of my opinion, and then overall try to make it make sense in the context of the market. So for those that think I'm not being objective enough, I'm sorry, but I am trying my best. It's the nature of dealing with a lot of narratives that are constantly going in every angle. David, thank you for the $28 super chat. Do you think that Palantir will continue to evolve and offer new AI products that target new markets such as automation, advanced humanoid robots, agriculture? What new industries do you think they will target? Could Palantir be the OS of AI? You know, speaking of Palantir, yes, I think they can target many, many markets, which is at the heart of your question. But there was a new deal today that we didn't even talk about because of all the pain that happened today. Palantir partnered with a $1.6 trillion bank in France. So Société Générale, Palantir has announced a deployment of their specialized technology solutions with them. It's a top-tier European bank. Let me know in the chat if you've heard of this bank before. I'm sure some of you guys probably have. Quote from the press release, with financial crime becoming ever more sophisticated, advanced data analytics and integration have become ever more crucial to effectively combating it. We are proud to be part of this critical challenge for one of Europe's most important financial institutions. $1.6 trillion company or bank in terms of assets. And this is one of the first press releases we got all year when it came from Palantir. So yeah, again, Palantir is not doing as many press releases anymore because I think they're doing more talking than walking. But they're a top 5 European bank. Your question, David, in the super chat was do I think they can evolve to become the OS of AI in terms of various industries? Yeah, that's always been my thesis. I think that thesis is playing out. They're not showing off all these flashy press releases anymore because I don't think they need to. But getting a bank like that to be able to deploy data analytics in regards to risk management and fraud mitigation on their entire asset class is pretty special. I wonder how much that deal is worth. We don't have any numbers on that, but that's a hell of a deal that we got this morning. So not bad to see us getting that deal here today. Okay, Trudeau is still not live. Let's get another update on the tariffs that are still currently in effect, and then Trudeau probably will be live in the next 5 to 10 minutes.
Pricing in 3 cuts from the Fed this year with a greater than 50% probability of a first cut in June, a second one in July, and now the third one in September. But we'll come to the rescue and how quickly. They're going to respond to weakness in growth and employment, but they can only do so if inflation is headed to the 2% target and inflation expectations remain under control. But 5-year inflation expectations measured by the University of Michigan, well, they shot up recently to 3.5% on those broad tariff concerns among the American public. That's the highest level in 31 years. Market-based expectations are lower but remain elevated. Krishna Guha of Evercore ISI says the road to a June cut runs through this. Moderate tariffs, that would mean backing off the current levels against Mexico and Canada, weaker job growth and declining inflation along.
Are we lagging? Are we lagging? Hold on, give it a second. Dude, this internet has been so annoying for the past couple of days. Like, I think they're putting tariffs on my freaking internet, bro. Hold on. Let's see. Okay, no, the audio is good, but my audio should be good now, right? The camera is being stupid. Dude, I have the best internet. Like, I don't have bad. We pay a lot for the internet. I feel like I have to get a new provider. This just can't keep happening. But every day, yeah, my internet needs Palantir or something. It's annoying. All right, it should be good now. It should be all right.
With contained inflation expectations. Markets seem to be betting on that scenario, but the Fed could find it tough to cut while tariff-induced price hikes are working their way through the inflation indices. And until it's clear to policymakers, they face one-time price hikes, not a rekindling of inflation. Guys?
But the problem, Steve, is that inflation, as you know, is not really demand-led inflation that the Fed fights. So it feels to me that it's easier for them to cut if we really start to see growth slow down, and particularly that have an impact in the labor market.
Yeah, that's right, Sarah. The trouble is that you can come to one conclusion if you sort of close one eye and look only at one part of it. The trouble for the Fed, I think, right now is the context. You know, they go back to 2018, and you see that the tariffs didn't cause a broad increase in the price indices. Well, inflation was below target then. We'd been through a very long stretch of below target inflation. Right now, if you listen to some Fed officials, they point out, hey, we've been through just a pretty good round of inflation. We're still above target. And so that context is going to give them, I think, a little more pause, suggesting to me the market might be a little more aggressive. You're right.
And Goolsby on Friday also said basically what he's saying right here, which is that, hey, we think we have inflation under control, but obviously it's not dramatically under control given we're at 2.9%. The Fed's target is at 2%, even though PCE came in better than expected. Bitcoin right here, 82,000. So I think the Fed probably is happy with some of the progress on inflation, but they're not thrilled. And based on these next few months of reports, given the economy is starting to weaken with the ISM data, we should get inflation at least closer to 2.5, in my opinion, especially if shelter officially starts to take into effect the lag that the Fed has. If not even below 2.5, and maybe that's too aggressive, but I don't think we're going to stay stuck and accelerate inflation into the 3% range. I mean, and if we do and we're not growing, welcome to stagflation. But I don't think that's going to happen. Hopefully not. Ontario is imposing a 25% export electricity tax on the United States. Let me confirm if that is true. That's probably what Trudeau is going to be talking about. He's not live yet. Yeah, there you go. There you go. This just came out 2 minutes ago. As per the Wall Street Journal, Ontario, 25%. Oh boy, export tax on electricity. Now I know why my Wi-Fi's been shit. This impacts 1.5 million homes in Minnesota, Michigan, New York in retaliation for President Trump's tariffs. The damn Canadians are taxing my electricity, which is messing with my Wi-Fi. Even though I don't live in New York, Michigan, or Minnesota, but we can blame the Canadians. That's a better solution than anything else I could come up with. So there you go. Canada's province of Ontario will slap a 25% export tax on electricity it sends to 1.5 million homes in Minnesota, Michigan, and New York in retaliation for President Trump's tariffs. President Trump underestimates the Canadian people. Ford said in an interview, he added that if more tariffs are added, Ontario is prepared to stockpile the nickel that the province's miners usually sell to the U.S. and sell to other markets. Canada sells roughly 50% of the nickel it produces to the U.S. companies and Department of Defense. He's going to wake up real quickly about our critical minerals, said Doug Ford, Ontario's leader. Well, we are in a full-on war. There you go. That's what Buffett said yesterday, right? We're in a war. We are in a full-on trade war at this point. Anton, thank you for the super chat. I worked in Society Generale, new management since last year, cleaning up from costs, stock surging, great deal for Palantir. I love it. When I saw that deal in the morning, I was like, this is a big bank. I did a little bit of research and I was like, holy crap, this is a huge company. So yeah, it makes sense that Palantir is getting this deal. And hopefully that can continue to expand their relationship with Europe. It's another international commercial deal, but it's also nice to see because we haven't seen too many of them. I'm blaming Tanner for this, dude. This is Tanner's fault. This is absolutely Tanner's fault. I didn't even know Ontario provides electricity to Michigan, New York, and Minnesota. I didn't know that. I guess this trade war is going to wake up a lot of Americans, including myself, to how much we need our Canadian friends because, dude, I did not know Canada provides electricity to New York or to at least 1.5 million homes in New York and Minnesota and Michigan. I didn't know that shit. I did not know that. Trump also did not know that. Yeah, Trump didn't know that either, apparently. Oh my gosh. Oh my gosh. Trudeau is not live yet. We are still waiting. Robinhood 43.13. SoFi down 8%. Who's buying? Did anyone buy today? Did anyone buy anything at all today? I bought Nvidia yesterday at 114, 115-ish. Obviously, that one has not worked out the best, but nonetheless, we DCA into that. I haven't bought Hood yet. I mean, last time I bought Hood was last week when it was at 45, so I haven't really bought the Hood dip yet. I bought SoFi at 1350 last week. I bought Rocket Lab at 1950. I bought Rocket Lab at. But haven't bought anything today. Tesla is 265. Apple's at 239. Grab just getting destroyed, down 5% on this macro. Okta is still up 19%. That's interesting that they're allowing Okta to run 20%, even though the whole market sucks. I guess the earnings were just that good. Okay, I see a lot of Hoods. I see Amazons. I see Googles. I see Teslas. I see SoFis. I see some Nvidias here. Where's Meta? Wow, Meta's down 5%. Holy crap. 625 on this thing was 740, dude. The amount of FOMO that people had at 740 on Meta. I mean, even I had that FOMO as well. I didn't buy it at 740, but like you felt like Meta was just running away from you. Meta right back to where it was pretty much to start the year. What was it at to start the year? Meta stock year to date is still up 4%. Meta was at 599 to start the year. Not that far away. Another 4 or 5% down. There you go. Meta will be flat year to date. Johnny says he doubled his small Tesla position. We got some Soundhounds in the chat. Sufan bought Shopify. Dexter bought Duolingo. Okay. They actually had a really good earnings. Why is SMCI doing so well? That is a hell of a question. I don't know. I guess SMCI got so sold from that. I mean, it's 45% down from where it was at the top a week ago. I guess people just felt it got oversold and they started buying. But SMCI right here, 3.5. Palantir down 2.1. Nvidia still red, which is interesting why SMCI is down, but SMCI holding up. ASTS is up 5. Tesla's down 7. JP Morgan's at, dude, the bank shouldn't be down 5%. When the banks are down 5%, that's how you know it's a real like pullback. At least today. The banks, I mean, when the banks go red, that just means the market's losing trust in financials as well, which is not supposed to be what they should be. They should be losing trust in everything that's speculative. The banks are, usually the least speculative. Let's go to the heat map of what we got right here. Today, yeah. So what's freaking green today? Apple is somewhat green. AbbVie, some of you guys have been talking about that one. I don't know why that one continues to be green, but that's green. UNH, healthcare is a little green. Google's a little green. Apple's a little green. Everything else is red. Everything else is red. If we go year to date, we see if year to date, it doesn't look that bad. You still got it. Like a lot of the banks are still green. The retailers, Costco is up freaking 13%. That's still green. McDonald's is up 8%. Meta's still up again about 4 or 5%. Netflix is up. Netflix is an interesting one. I don't know how Netflix is maintaining their multiple, but I mean, I guess Squid Games was that good, which TLDR it wasn't. Although I'm excited for You. Season 2 or season 5 of You, I'm excited for that one. But that one seems like a growth stock that, could run into some pain. You have some pockets of green on the year to date, which is why we really can't say it's that bad of a year yet. But obviously on the daily performance, a lot of these names are just blood red at this point. Yeah, consumer staples. Consumer staples are also getting some of that momentum as well. You has another season? Yes, You has season 5. You is the best show Netflix has ever created, in my opinion. Like, I really think that's one of the best shows ever. If anyone hasn't watched it, I think you will be entertained and enjoy that show. I don't think it's a waste of time. But they have season 5, and that's the last one that they're coming out with. Netflix is like 85% institutional owned. Yes, that's true. But the institutions, they'll sell your stock as quick as they buy it, right? Like, I mean, honestly, retail holds on a little bit better than the institutions when it comes to some of this volatility. But like if like Netflix, to me, they're growing 18%, trading at a 38 PE. I'm not saying that's the most expensive, but it's definitely not the cheapest. And Granted, it is down from like 1,100, so it's already taken a little bit of a haircut. But if they show any growth, any slower growth in subscribers next quarter, that just goes back to this whole consumers aren't willing to pay $10 a month, $20 a month because they're worried about the economy. And obviously that could compress a company like Netflix. Joseph Carlson actually had a good take yesterday as well. His take is very similar to what Kris said, which is that if you're in good companies, this doesn't matter, right? And I know it's a very simple take, but it's a simple argument. He said right here, a consumer recession, it'll affect Amazon, but Amazon is too large and diversified to go out of business. Netflix is the cheapest form of entertainment. It naturally will aggregate demand. Texas Roadhouse will profit, or profits will go down, but their cost structure is flexible. Therefore, they will be able to survive. Booking Holdings will be able to survive. And I commented, I agree with every analysis you made, but you'd also agree that a consumer recession would fundamentally decrease multiples. And he said, yeah, it's going to suck for the multiples. Amazon's probably not going to be at 200. Maybe it goes back down to 140, 150. But my timeline is way longer than 1 to 3 years. So Amazon at 140 would be a buying opportunity, not something that I'm afraid about. And I think that's a fair point. I think that's a very fair point. Like, if you're in Amazon, you should be in it for the next 10 years, not for the next 2 years, which means 2 years can suck. But we saw what happened in 2021. Amazon got to 180 or got to 80. Now it's at 200, 230 at the top. If you were patient during that time, you did really well, right? And I don't think we're going to get that type of a dramatic decline again. But if we do have volatility, which we're already seeing right now, waiting it out is kind of the easiest way to withstand it. Someone, I don't know if I saved this tweet, but someone I saw, let me see if I can find it. Someone bought $47 million of, yeah, I got it. S&P 500 calls. Trudeau, by the way, is still not live. Trudeau's still not live. $47 million of S&P 500 510 in the money calls. They expire in 45 days. So by mid-April. As you can see right there, they bought 6,000 of them and they spent about $47 million. So some trader out there said they are pretty damn bullish on the S&P being at least above 47, or sorry, 510. The premium, how much premium did they pay on this? They paid $70 a premium, so 510 plus 70, so 580. So they're basically assuming the S&P will be above 580, which is basically where the S&P is at right now. Where's S&P? S&P is 573. Never mind, it's below, so they're definitely down on those calls. They're assuming it'll be 580 by April 15th, and they made a $50 million bet to kind of put their money where their mouth is. So we're gonna see if that plays out. Did Tom Lee say it's likely to dip before June? No, Tom Lee said the opposite. Tom Lee said we're going to bottom this week, which maybe he'll be right about. I mean, this week's not over. Maybe we do bottom this week, but he said we're going to bottom this week and then we will make our way higher. I guess we're going to find out if this week actually is the bottom. Let's get an update on Apple and how they're dealing with these tariffs, as well as we wait for Trudeau to go live.
Yeah, David, it got hit yesterday with that 10% double whammy on China. So now that brings it total to 20% of tariffs on imports from China. So Tim Cook, the CEO of Apple, he's been pushing really hard for tariff relief. Late last month, he met with President Trump in the Oval Office. And a few days after that meeting last Monday, announced that $500 billion U.S. investment that also includes some manufacturing down in Houston for artificial intelligence servers that were previously being made overseas. Now, a lot of analysts picked through that announcement and said most of that spending was likely in the cards already, but still, that wasn't the only offer Apple has made to Trump as for this tariff relief. Before that, there was that $1 million personal donation that Cook made for the inauguration fund. And of course, he attended the inauguration with all those other big tech executives. Cook, by the way, he kind of wrote the playbook for getting tariff relief from Trump back in the first administration. And analysts say, though, this tariff is in effect right now. And that first round of tariffs, just the 10%, would be a low to single digit percentage hit to earnings. We'll have to see what they say for this round. No analyst notes on that yet. They're probably still doing the math on that. The big question, though, guys, is price increases. Apple hasn't really mentioned anything about increasing prices for its products, but we did get the iPhone 16e, that new model of the iPhone announced a couple weeks ago. That is $170 more than the previous model. And just this morning, there was a new iPad Air going the other way, starting at $599, which is the same price as last year's version. We're also expecting another announcement, a product announcement this week, the new MacBook Air. So we'll see what the pricing looks like there. But it's really going to come down to the iPhones and things like that, guys. I will also note Microsoft is feeling the pain here, as are so many other PC makers. Carl, I'll send it back over to you.
All right, Steve, talking a bit. Steve Kovac. Let's stick with that tech trade. Despite these recent declines, our next guest says that Nvidia, Tesla, and Palantir have showed the most net buying of active stocks on his platform. Favors some low volatility, high dividend names here. Steve Sosnick's with us, Interactive Brokers chief strategist, joins us here at Post 9. It's a good day to have you.
Good to see you.
Thanks for coming in. Talk about why those names in particular are moving.
You know, we're still having this little battle between, you know, what I'm going to call FOMO, MOMO, and NOMO. You know, basically, there's still this fear of missing out. We see here just the SPUs have bounced like 40 points since I've just been walked from there to here. And so people really don't want to miss what they see as a buying opportunity, because for the better part of the last few years, every dip has been a buying opportunity. This one, not so much. And I think a lot of what we see are active traders sort of wedded to that strategy, hoping this will pan out. And, and those moments where it does pan out, we see, people jumping right back in.
Right. So this notion of a retail buyer strike combined with a hedge fund momentum unwind, is that a fair framing at the moment?
To some extent, I would say our customers really range the gamut from small investors to large investors, and very heavily, the numbers I'm seeing are very heavily weighted toward active traders, because if I'm looking at activity numbers, it's going to be the most active customers. Those, one of my friends at the SIBO calls it pro-tail, because they're sort of retail, but a bit more.
So what are they doing with tech, the heavily owned Mag 7 stocks?
As of the last time I checked the numbers this morning, they were still buying. Nvidia remains the most actively traded and the most actively bought stock on our platform, Tesla being number 2. These stocks brought them to the dance, and they're not abandoning them.
Was Friday a good example of that too? What do you think happened there Friday? Or was it about month end, something else?
I think Friday was month end. I think that close was for lack of a better word, phony as can be. But it shows you how the market, as soon as there's a buyable dip with any little bit of momentum, people jump on it. And it was probably no coincidence that it was month end, certainly the month end bargain hunting, but also no coincidence that it was a Friday where you had weekly option expiration, and of course the daily option.
What about the day part? First 2 hours of trading versus last 2 hours. Are you seeing evolution in that kind of behavior?
I don't have clarity into what our customers are doing in that, but what I see in terms of the market behavior, yes. I mean, I think this was the rare morning where we didn't wake up and see futures just grinding higher. Wake up and see them up 5 points and then see them up like 20 or 25 points by the time we get in, or sort of the market opens. And so there's been this grind higher because people are used to it. We didn't see that today because.
All right, Trudeau is live. I missed the first 30 seconds, just rewinding a little bit, and then we're getting.
States launched a trade war. So today, the United States launched a trade war against Canada, their closest partner and ally, their closest friend. At the same time, they're talking about working positively with Russia, appeasing Vladimir Putin, a lying, murderous dictator. Make that make sense.
The audio on this sucks. Hold on, let me go to a different one. This one's better.
Their closest friend. At the same time, they're talking about working positively with Russia, appeasing Vladimir Putin, a lying, murderous dictator. Make that make sense. Canadians are reasonable, and we are polite, but we will not back down from a fight. Not when our country and the well-being of everyone in it is at stake. At the moment, the U.S. tariffs came into effect in the early hours of this morning, and so did the Canadian response. Canada will be implementing 25% tariffs against $155 billion worth of American goods, starting with tariffs on $30 billion worth of goods immediately, and tariffs on the remaining $125 billion of American products in 21 days' time. Encore aujourd'hui, on se voit forcé d'imposer des droits de douane de 25% sur 155 milliards de dollars américains de marchandises. 30 milliards de marchandises américaines, excusez-moi. 30 milliards de dollars de façon immédiate et dans 21 jours, 125 milliards de dollars de marchandises de plus. Today, we will also be challenging these illegal actions by filing dispute resolution claims at the World Trade Organization and through the USMCA. But in the meantime, our tariffs will remain in place until the US tariffs are withdrawn and not a moment sooner. And should these tariffs not cease, we are in active and ongoing discussions with provinces and territories to pursue several non-tariff measures, measures which will demonstrate that there are no winners in a trade war. Now, just like I did a month ago, I want to speak first directly to the American people. We don't want this. We want to work with you as a friend and ally. And we don't want to see you hurt either. But your government has chosen to do this to you. As of this morning, markets are down, and inflation is set to rise dramatically all across your country. Your government has chosen to put American jobs at risk, at the thousands of workplaces that succeed because of materials from Canada or because of consumers in Canada, or both. They've chosen to raise costs for American consumers on everyday essential items like groceries and gas, on major purchases like cars and homes, and everything in between. They've chosen to harm American national security, impeding access to the abundant critical minerals, energy, building materials, and fertilizers that we have and that the United States needs to grow and prosper. They've chosen to launch a trade war that will, first and foremost, harm American families. They've chosen to sabotage their own agenda that was supposed to usher in a new golden age for the United States. And they've chosen to undermine the incredible work we've done together to tackle the scourge that is fentanyl, a drug that must be wiped from the face of the earth. So on that point, let me be crystal clear. There is absolutely no justification or need whatsoever for these tariffs today. Now, the legal pretext your government is using to bring in these tariffs is that Canada is apparently unwilling to help in the fight against illegal fentanyl. Well, that is totally false. Let's look at the facts. Our border is already safe and secure. Far less than 1% of fentanyl flows and less than 1% of illegal crossings into the United States comes from Canada. But we acted because we know we can always do better. We responded to concerns, including from the president, by implementing an ambitious $1.3 billion border plan. A border plan that includes generational investments in new AI and imaging tools to stop the flow of fentanyl in its tracks, stronger coordination and information sharing with American agencies, along with the deployment of drones, helicopters, and additional personnel to keep our border secure. Now, a month ago, as part of an agreement with the United States that paused the tariffs, we made further commitments. We appointed Kevin Brosseau as our fentanyl czar, a man who dedicated his multi-decade career in law enforcement to combating organized crime networks and drug trafficking. We designated 7 drug cartels sick, evil groups who cynically profit off the pain and suffering of people on both sides of the border as the terrorist organizations that they are. And just yesterday, we launched a new joint operations partnership supported by a $200 million investment between Canada's security and law enforcement agencies, a partnership that will enhance the coordination of information and intelligence in order to thwart criminal gangs involved in the illegal fentanyl trade. And critically, our actions are working. As the U.S. Customs and Border Protection just acknowledged, there was a 97% drop in fentanyl seizures from January compared to December, to a near zero low of less than half an ounce seized in January, even with all the further enforcements and actions we've taken at the borders. In sum, we stepped up. We engaged closely and constructively with the president and his administration. We did everything we promised. We stuck to our word. And we did it because we believe in working together to protect our citizens. Now I want to speak directly to one specific American, Donald. In the over 8 years you and I have worked together, we've done big things. We signed a historic deal that has created record jobs and growth in both of our countries. We've done big things together on the world stage, as Canada and the US have done together for decades, for generations. And now we should be working together to ensure even greater prosperity for North Americans in a very uncertain and challenging world. Now, it's not in my habit to agree with the Wall Street Journal, but Donald, they point out that even though you're a very smart guy, this is a very dumb thing to do. We two friends fighting is exactly what our opponents around the world want to see. And now to my fellow Canadians. I won't sugarcoat it. This is going to be tough, even though we're all going to pull together, because that's what we do. We will use every tool at our disposal so Canadian workers and businesses can weather this storm. From expanding EI benefits and making them more flexible to providing direct supports to businesses, we will be there as needed to help. But Canada, make no mistake, no matter how long this lasts, no matter what the cost, the federal government and other orders of government will be there for you. We will defend Canadian jobs. We will take measures to prevent predatory behavior that threatens Canadian companies because of the impacts of this trade war, leaving them open to takeovers. We will relentlessly fight to protect our economy. We will stand up for Canadians every single second of every single day because this country is worth fighting for. Les derniers mois ont été stressants et honnêtement épuisants pour nous tous. Mais je crois qu'on peut être rassuré par l'incroyable solidarité dont on a tous été témoins entre nous. Solidarité entre nos entreprises, nos syndicats, notre société civile, les communautés autochtones et tous les Canadiens. L'ensemble de la société canadienne parle d'une seule voix pour qu'on se fasse entendre de nos partenaires américains pour illustrer que l'imposition de droits de douane, c'est une très mauvaise idée. En même temps, on travaille à l'interne pour faire tomber les obstacles au commerce entre nos provinces et territoires. On travaille pour rejoindre de nouveaux marchés à travers le monde, pour bâtir une économie toujours plus forte et plus résiliente. Dans les dernières années, j'ai eu plusieurs occasions de discuter avec des leaders du monde entier. Mon message est toujours le même. Le Canada est un partenaire fiable et notre porte est grande ouverte. Dans les dernières semaines, on a aussi redoublé d'efforts pour renforcer nos liens avec le Mexique, qui a lui aussi été frappé par ces tarifs. Ensemble, on va chercher de nouvelles façons de collaborer et de s'appuyer l'un sur l'autre pour faire face à cette menace. Face à l'incertitude, face à l'inquiétude, les Canadiens ont fait preuve de tellement de solidarité. Je vous ai vu partager des listes de produits canadiens pour aider vos proches à appuyer les entreprises d'ici. Je vous ai vu changer vos plans de vacances et opter pour des magnifiques destinations touristiques qu'on a ici chez nous, au Canada. Je vous ai vu redoubler d'efforts pour soutenir nos petites entreprises et nos travailleurs. Je vous ai vu vous porter à la défense de notre culture et la faire rayonner. Je vous ai vu encourager nos athlètes avec une ferveur sans précédent. Moi qui croyais que je ne pouvais pas être plus fier de notre pays et de mes compatriotes. Mais j'ai encore quelque chose à vous demander. Lâchez pas. C'est le moment de redoubler d'efforts, de se tenir debout pour notre pays, de faire tout ce qu'on peut pour choisir le Canada, pour défendre le Canada. On va passer ensemble à travers des moments difficiles. Mais après vous avoir vu aller dans les dernières semaines, j'ai jamais été aussi optimiste quant au futur de notre beau pays, malgré tous les défis qu'on va être en train de vivre ensemble. Le Canada reste le meilleur pays sur Terre. On a tellement de raisons d'être fiers de notre chez-nous, de ces quelques arpents de neige. Mais surtout, je suis fier de notre capacité à nous serrer les coudes quand vient le temps. Les Canadiens ont différentes origines, différentes langues, différentes croyances. Mais quand vient le temps de défendre notre pays, on le fait d'une seule voix, main dans la main. À travers vents et marées, les Canadiens peuvent toujours compter les uns sur les autres. Now, we've been through tough spots before. But every time we've faced long odds and seemingly insurmountable obstacles, we've not only survived, we've emerged stronger than ever. Because when it comes to defending our great nation, there is no price we all aren't willing to pay. And today is no different. Merci beaucoup, mes amis.
Thank you very much, Mr. Prime Minister. Merci beaucoup. We will now take 20 minutes of questions. Nous prendrons 20 minutes de questions.
Okay, I think we'll watch the questions and then we'll end it out, but that I just paused it right there. We'll go back to it in a second. That is Trudeau's statement. The official takeaway from that is he has announced Canada is slapping 25% tariffs on U.S. imports valued at 30 billion Canadian dollars, and then an extra 25% tariffs on another 125 billion of U.S. imports that will hit over the next 21 days. So basically $155 billion of tariffs he's retaliating with. In terms of markets, S&P now down 1.73%. I think that's a low of the day. SMCI is up 4% somehow. Netflix is down 2%. Palantir down 3%, still holding $80. Robinhood 42.72, that's down 9%. SoFi down 9%. Nvidia down 2%. Rocket Lab down 3%. A little bit of a bounce from some of the absolute lows that we saw today. But the broader market definitely still getting hit bad. JP Morgan still down 5%. Tesla 265 down 7%. And then the S&P 500 down about 1.8% on the day. We'll take a listen to the questions and then we'll be done for the market open today.
One question, one follow-up, une question, un suivi. Merci.
Hi, Prime Minister Tom Perry with CBC. You're reaching out to the president today. You're speaking directly to him. We heard from U.S. Vice President J.D. Vance, who says that Donald Trump will be speaking to Canadians. And he also says that he wants to see more progress on fentanyl. So my question to you is, do you have any conversation scheduled with Donald Trump in the coming days? Is that something maybe your successor should do? And do you really believe that this is about fentanyl, or is there something larger at play here?
I have offered to speak to Donald over the past number of days, and I expect to speak with him in the days to come. I'm always there to talk with him about the importance of working together to take on the world at this time. The facts show very clearly that in terms of taking action on fentanyl, we are doing everything that is necessary, and not just for the United States, for ourselves as well, as Canadians are suffering as well from the scourge that is illegal fentanyl. We have laid out extensive plans, actions, cooperations, including as recently as the past days in Washington, and they have always been very well received. And the numbers bear that out. I think in what President Trump said yesterday, that there is nothing Canada or Mexico can do to avoid these tariffs, underlines very clearly what I think a lot of us have suspected for a long time, that these tariffs are not specifically about fentanyl, even though that is the legal justification he must use to actually move forward with these tariffs.
Monsieur Trudeau, en français, à part l'allocution que vous avez eue envers Monsieur Trump, lui avez-vous parlé au cours des derniers jours, des dernières heures?
Non. Je me suis mis à sa disposition pour parler pendant les derniers jours, comme on avait fait il y a 30 jours. J'espère lui parler dans les jours à venir. Je suis toujours ouvert pour parler.
And sir, you mentioned this off the top. You're seeing the United States seemingly moving closer to Moscow. This is a same day that the United States has announced it's suspending aid for Ukraine. The Kremlin just said that U.S. foreign policy now is in alignment with Russia. So how do you successfully, or your successor, successfully negotiate with a president who seems to regard his friends as his enemies and his enemies as his friends?
In this regards, Canada and Canadians are very clear. We know who our friends are. We know who our opponents are. And there is no question that Vladimir Putin and his attack, not just on Ukraine, but on the rules-based international order, on the founding principles of the United Nations, is an opponent of Canada. I think the question that we all need to be watching closely is, what do the American people think? How do Americans feel about jettisoning one's friends and allies in favor of a country that has never wished Americans well and continues to act in ways that harm the global economy and specifically the American economy and American values and principles?
Bonjour, M. Trudeau, Valérie Gavage de Radio-Canada. J'aimerais vous entendre sur les programmes d'aide. Au Québec, on parle de 160 000 emplois qui pourraient être perdus. M. Ford a dit ce matin, dans 8 à 10 jours, il y aura des mises à pied dans les usines d'auto. Est-ce qu'il y a quelque chose sur la table aujourd'hui qui peut être annoncé pour les Canadiens, ne serait-ce que de limiter le délai pour avoir accès à l'assurance-emploi?
Il y a des choses qu'on va regarder immédiatement sur l'assurance-emploi, mais je veux rappeler aux gens que notre but, c'est pas de trouver des façons pour que les Canadiens puissent passer à travers de ces moments difficiles, c'est d'empêcher ces moments difficiles de durer plus que le temps minimum nécessaire. Si on peut faire enlever ces tarifs demain, c'est ce qu'on va essayer de faire. Notre priorité, c'est de mettre fin à cette guerre économique. Et le fait que des Américains, dès aujourd'hui, font faire face à des mises à pied, vont faire face à des problèmes au niveau de leurs produits de consommation, va nous aider à mettre fin à ces défis le plus rapidement possible. Mais effectivement, on est en train de regarder toutes sortes de choses que nous pourrons faire si effectivement ces tarifs durent plus longtemps qu'une journée ou deux, même avec des actions quasiment immédiates sur l'assurance-emploi qu'on va regarder aujourd'hui même. I think the thing to remember first and foremost, as we reflect on the impacts on Canadian workers and Canadian jobs and businesses is that, first of all, there will be similar impacts on Americans losing their jobs, American families paying more for basic goods that they rely on at a time where times are tight everywhere. But our focus has to be on getting these tariffs lifted as quickly as possible. What can we do in the coming days is our focus to make sure that these tariffs don't last a second longer than necessary. So we will be looking at, including looking in the coming day at things we can do around adjusting EI to support people through this difficult time. But our priority has to be not on figuring out how to manage through these tariffs over the coming days and weeks and months, but on doing everything we can to get them lifted and put an end to this unjustified trade war that hurts American families and Canadian families.
On a l'impression que vous n'avez plus beaucoup de cartes dans votre jeu. Est-ce que de devancer la renégociation de la CEUM fait partie des plans actuellement plus que jamais?
Actuellement, dans les conversations avec le président, c'est pas très clair ce qu'il veut exactement. Ou peut-être la seule clarté, c'est ce qu'il a dit à multiples reprises, que son but, c'est de faire écrouler l'économie canadienne pour ensuite pouvoir parler d'annexation. C'est ce qu'il veut. Alors, je ne sais pas quelle négociation on pourrait entamer actuellement pour éviter, pour lui convaincre que ce n'est pas ça son but. Notre réponse aujourd'hui est ancrée dans le fait de démontrer à quel point nos économies sont interreliées. Et si on crée des barrières entre nos économies, les familles des deux côtés de la frontière vont souffrir. Pour démontrer qu'on devrait être en train de faire des choses ensemble. Et pendant qu'il fait le choix de vouloir ruiner l'économie canadienne, je ne sais pas si devancer des négociations dans une situation de si mauvaise foi dans laquelle on se trouve maintenant, où il amène des tarifs sans aucune justification factuelle aujourd'hui, je ne sais pas si d'ouvrir les négociations, on serait toujours ouvert à le faire s'il le voulait, mais ce n'est pas un enjeu dont il a parlé pour le présent. I'm just trying to remember. What was that? Cosma, that's right. I think in terms of what he wants, and I heard he talked about banking again this morning in a tweet, which doesn't make any sense because American banks, there's about 16 American banks currently active in Canada holding about $113 billion worth of assets in this country. So the American banks are alive and well and prospering in Canada. It's an example of not really being able to see what it is that he wants, because even the excuse that he's giving for these tariffs today of fentanyl is completely bogus, completely unjustified, completely false. So we actually have to fold back on the one thing he has said repeatedly, that what he wants is to see a total collapse of the Canadian economy, because that'll make it easier to annex us, is the second half of his thought. Now, first of all, that's never going to happen. We will never be the 51st state. But yeah, he can do damage to the Canadian economy, and he's started this morning. But he is rapidly going to find out, as American families are going to find out, that that's going to hurt people on both sides of the border. Americans will lose jobs. Americans will be paying more for groceries, for gas, for cars, for homes, because we have always done best when we work together. So we are, of course, open to starting negotiations on the customer review. But let us not fool ourselves about what he seems to be wanting. And I will admit, I have been holding out hope that these tariffs were just a clever negotiating ploy that would have the impact that they're having now without even bringing them in over the past weeks, as we've seen order books dry up for Canadian companies from American customers, as we've seen expansion plans in Canada put on hold, as we've seen people choosing to invest in the United States over the past weeks because of the threat of tariffs. But now that he's moved forward with tariffs, we're going to see the real impact of a trade war between our two countries. And that impact will be to hurt American families.
Prime Minister Tonda McCharles with the Toronto Star. I hope you can be as specific as possible for a number of these points. Everybody's looking to what actually you're going to do. In your statement last night, you referenced non-tariff measures, and I want to know exactly what you're prepared to contemplate there. And given that your likely successors, both Carney and Poilievre, have said it should be dollar for dollar retaliatory tariffs, that's on $600 billion worth of American imports. If you were to do that, is that on or off the table?
I will be sitting down, as I have every week for the past many, many weeks, with the premiers this afternoon to talk about our individual, combined, and collective response to this. As we've put on the table, the federal government has $155 billion worth of tariffs that we can move forward with immediately, and that we will be moving forward with both now and 21 days from now to give Canadian companies time to adjust their supply chains to not be overly impacted by this. But there are many other things that have been surfaced by different premiers in different approaches that we can look at. One, for example, is around purchasing and around suppliers and around contracts, whether it's municipal, provincial, or federal, with American companies. There are many different things that we've been looking at, and that conversation with the premiers this afternoon is going to be very, very important. But I can tell you what we have seen is Canadians across provinces and territories, across political lines, are united in knowing that this is a time to hit back hard and to demonstrate that a fight with Canada will have no winners. And the sooner we can get past this fight, back to working together to take on the world as our two countries always have, the better we'll all be.
To what extent have you turned or gotten cooperation from any other allies to exact more pain on the U.S. to accelerate getting to a solution? And are you concerned that Mexico appears to be trying to do their own thing maybe next Sunday? Where are you with any guarantees you've got allies?
I've just spent quite a bit of time over these past couple of weeks meeting with European and international allies to talk about a number of different things, including standing up for the rules-based order by defending Ukraine, but also being there for each other in a more challenging and uncertain world. And I can tell you that every country is very, very aware that if the American government is willing to do this to their own closest ally, neighbor, and friend, everyone is vulnerable to a trade war. And our ability to work together thoughtfully and strategically to make sure we're supporting our citizens, we're doing things together in a more diversified way is something that is on the mind of all of our allies.
En français, vous en êtes où dans les discussions avec les alliés, que ce soit européens ou mexicains?
Comme vous savez, au cours des dernières semaines, j'ai eu beaucoup de conversations en personne avec plusieurs de nos alliés et nos amis européens et à l'international. Tout le monde est inquiet. Ils savent très bien que si les Américains sont prêts à faire ça au Canada, leur allié le plus proche, leur partenaire le plus interconnecté, tout le monde est à risque. Et notre capacité, donc, de travailler ensemble, d'en faire plus ensemble, de diversifier nos chaînes d'approvisionnement de façon encore plus délibérée. Est une conversation qu'on est en train d'avoir et vont continuer d'avoir avec nos alliés. Avec nos partenaires mexicains, on continue à être en contact étroit avec eux et on va continuer de regarder comment on peut faire des choses ensemble, comme j'ai dit, pour ne pas souffrir plus que nécessaire avec ces actions américaines.
Thanks. Hi, Prime Minister. Rachel Haynes from CTV National News. As we know, the Liberal Party is going to be picking a new leader over the weekend. But when is it going to be your last official day as Prime Minister?
That will be up to a conversation between the new leader and myself to figure out how long a transition is needed. It should happen reasonably quickly, but there's a lot of things to do in a transition like this, particularly at this complicated time in the world. Ma dernière journée sera déterminée une fois que le nouveau chef du Parti libéral sera choisi. C'est une conversation sur combien de temps vont être nécessaires pour la transition. Il y a énormément d'éléments à considérer, mais je sais qu'on veut faire ça assez rapidement.
Thanks. So it sounds like it won't be immediately on March 9th or March 10th. So it sounds like you'll probably still have some time remaining to put in some more actions on this. Is one of those things that you're considering going to be taxing oil, gas, and potash exports, even if premiers don't consent to that?
As I said, the most important thing we're facing, as I've said, the most important thing we can do is ensure that Canadians remain united. That's why whatever response, individually or collectively, we do across the country, we have to make sure that no single part of the country is carrying a greater burden or suffering any more than everyone else. This is going to be tough for all of us, but we need to be pulling and holding Canadians together every step of the way. And that's the conversation I'm going to be having with the premiers this afternoon in our now weekly meetings. There will be many different ideas we discuss, but the most important thing, more important than doing specific or effective pressure points on the United States, is keeping Canadians united together. As we go through the pain that these American tariffs will inflict on our economy, on our workplaces, on Canadian families, we will be able to say this is happening to us by the decisions of a different government. As American families suffer the impact of these tariffs, of this trade war with Canada, they will be saying this is happening because our own government is choosing to do it to us. That's a very different proposition. And the most important thing right now, more important than anything else, is for Canadians to remain united. And that's why all premiers will be focused on things that make sure Canadians don't get divided amongst ourselves. This is a time for us to pull together because the Americans will be having very real and very challenging debates and discussions about these actions. There will be no debate in Canada about whether or not we should be pulling together and responding. Everyone is aligned on that, and protecting that is job one for the Canadian government and the Canadian Prime Minister.
Hi, Mr. Trudeau.
Okay. Évidemment.
All right, I'm not, it's got to be annoying for him to repeat this every single time in a different language, but I think we got the gist of it. We got the gist of it. Tariffs are being imposed on the United States as a retaliatory effort. Markets bouncing just a little bit right here, 574. We were at the 572 range. Again, just a very small bounce. Same thing with Nvidia, 113 up from 110. Counter as well. We're getting a little bit of green candles across the board. SMCI, how the heck is this thing up 7%? I don't get that, but It is up 7%. Best performer today, to be honest, across the market. Enphase is up a bit. C Limited is up. GitLab is up. Nubank is still down. The majority of the market is still obviously down on the retaliatory tariffs. Fear and greed at this point has now officially gone below August 5th. I mean, either you think that's a buying opportunity or you think we've got a lot more pain when it comes to fear and greed, but we are officially at levels that we haven't seen since August. And that is the pain that we're currently experiencing right now. Now, granted, we're not going lower than the intraday lows. After that Trudeau speech, we still haven't broken some of these levels that we hit around 11 a.m. Now it's 11:45. So we had about a buffer of 45 minutes in terms of this bounce. Tesla's still at 267. Its lows were 261. We haven't hit those lows yet, but there's still more announcements throughout the day. I will be live in the night for the State of the Union. I even forgot that was happening today, but that is happening today. So I think at 9 p.m. I'll be live streaming the State of the Union. And we'll see whatever Trump says there, which I'm sure the markets will be paying a lot of attention to and reacting to as well. So we're going to see what happens today. Doug says, doesn't it make sense to be in software and SaaS as they do not have products to be terrified? Yeah, I mean, IGV is outperforming SMH. So yes, I think that makes sense. We saw that with Okta and GitLab. They did great. They had good earnings. The market's rewarding them. I don't hate the SaaS trade over the semis trade, but everything's down so much at this point. You know, the question becomes, is every sector just due for a bit of a bounce, regardless of which sectors might be less susceptible to tariffs? But I guess we're going to find out. There is one way that SaaS names are affected by tariffs. I mean, if general economic activity slows down because of tariffs, then people start spending on software, right? Because companies are like, okay, we don't really need this. Hopefully Palantir is one of the companies where clients are like, yeah, we absolutely need their software. We can't get away from them. But other, you know, software platforms that you don't really need maybe gets cut back in terms of spending if economic activity goes down. That's an indirect impact of tariffs, but overall they should be safer than not versus the semis. All right, cool. So that is it for today. I'll be live on the market close in a couple hours, and then I'll be live for, it's not a State of the Union. It's a, what is it today? It's a joint. Okay. So it's not a State of the, no, I think you guys are right. It's not a State of the Union, but it's a joint session of Congress that he's having. It is going to be called, yeah. Okay. So it's a joint session of Congress. It's not the State of the Union. It's a joint session of Congress. So, I mean, it's basically the State of the Union, right? He's basically talking to everyone. That's what the State of the Union, but I guess it's not literally the State of the Union. Nonetheless, I'll be live at 9 p.m. Eastern. That'll happen at 4 p.m. That's happening at 4 p.m.? What? Okay, never mind. It'll happen on the market close. Unless this is wrong. Hold on. Let me confirm. 4 p.m. That's usually not the time they do it at. Yeah, if they're doing it at 4 p.m. All right, guys, on the market close, we will see. No, it's 9:10. I don't know why that was. Okay, so the White House official link is at 9:10. Okay, so that's not 4 p.m. Not 4 p.m. 9:10. All right, so we'll be live at 9 p.m. I don't know why one of the links said 4 p.m. So we'll be live at 9 p.m. We'll be covering that. Jason will be on for Technical Tuesday on the market close, which means we're going to probably be streaming till 7:30, and then 2 hours later I'll be live again. So the next 3 hours is the break that I get, but it will be a long day once we start with the market close. And yeah, I mean, it's been incredibly volatile. We got Canada retaliating. We got Mexico, CNBC is reporting is retaliating. China already said they're retaliating. I think Trump in this joint session of Congress is going to try to make his argument for why the tariffs are necessary. Now, again, I think Kris made a really good point today that $7 trillion of debt that we have to get refinanced. That's probably the reason why they're so gung-ho about getting the 10-year to come down, which means they've got to get the economy to take a little bit of a break as well, as bad as it is in the short term. But it is working because that 10-year continues to fall now at 4.159%. So I think Trump will probably reference this stuff while he talks today. He's probably going to make some updates on the progress the administration has already made in the past 2 months. And then we're going to see how the market ultimately reacts to all this. At the end of the day, fear and greed, dude, below August 5th levels is kind of insane to me. I would be not shocked if we bounce from here. And if that's it, For us to go lower means that something's actually breaking in the economy, and maybe it is. And maybe, people are still waiting to see what that is. But we would need something to break, whether it's the labor market, inflation ramping up again, whatever it is, for us to get to what, 10, 8 on the fear and greed instead of 15. Like, things would have to get pretty aggressively bad. And so I guess over the coming weeks, we're going to see how this ends up playing out. Okay, cool. That's it. Let's do word of the day, and then we are out for today. I'm going to go to the gym after the market open, sweat it out. I did not go to the gym in the morning because, when you go to the gym for the first time after a long time, I woke up and I was like, oh, this hurts. Like, I forgot. Like, after you work out, like, your body's in pain. So go into the gym after this show ends and going to get through it. But literally no pain, no gain, right? No pain, no gain. Same thing with the markets. Same thing with the working out. Word of the day is stolid.
Stolid.
A stolid person can't be moved to smile or show much sign of life in much the same way as something solid, like a giant boulder, is immovable. Both are expressionless. I actually like this word. This is a cool word. So stolid is a person who doesn't show signs of life. Essentially, they're emotionless, expressionless. And it's similar to the word solid because it's immovable. Yeah, I think all of us have to be pretty stolid today, right? The only way you survive all of this freaking red is if you're stolid today. Because if you're too emotional about it, then obviously it'll take you to a dark place. So that's the one thing I want to say to everybody. For those that are here, first of all, thank you everybody for joining the show today. I hope no one really starts getting any dark thoughts. Okay, at the end of the day, it's markets. If you literally don't need the money right now, just don't look at it. That money will come back in the future if you're invested in the right companies. If you're invested in shitty companies, take the loss and move on to good companies, right? And if you can afford to have your portfolio go down because you have an actual job, you have income, you can pay your rent, you can handle all that stuff, then that's okay. And if you need to take some profits, if you're up a lot of money on certain positions still, and you just like the idea of having cash, although I think given fear and greed is this low, selling right now it's hard for me to rationalize it. But if you just want that cash on the side, especially if you're close to a margin call or if you're leveraged and you need to make sure you have cash reserves, then don't think twice about it. Just like have a position of cash. If you need to take a small loss, okay, you get to write it off on your taxes. Like if you're down 3,000 on a position, you don't want to lose the 3,000. Well, you can reduce the 3,000 from your gains that you'll hopefully have by the end of the year, and that 3,000 won't matter that much. So I don't think overcomplicate it. I think at the end of the day, don't get to the point where your mental piece starts thinking of like really bad things, because it's not worth it. Like the stock market is not worth your mental sanity, especially in a world in which a lot of this shit is happening because of algorithms and it manipulates so many people. But at the end of the day, good companies are good companies and they will survive. And that's what matters. On this topic, I talked to Derek yesterday. He was like, dude, I'm not going to look at my portfolio or else I'm going to commit suicide. So that's also why I'm bringing it up, because you guys think you're down. Derek's not even opening up his portfolio, bro. Derek's like, you know what? I already know what he was joking, but also he was kind of just like, I'm just not looking at it. I'm just like, I'm not going to take a look at it. Derek had something actually really good happen in his startup yesterday. He's like kind of singularly focused on the startup, but obviously he cares about the stock market, but he cares more about his startup. And yesterday was a really big deal they got done. So he was really happy about it. And he was like, I was not going to let anything take away my happiness. I was not looking at the portfolio. He was like, I didn't even open it. I don't know the password anymore. It was like, it was such a good day for the startup. We're just going to focus on the startup. We're not going to look at the portfolio. He has a ton of Tesla, a ton of Nvidia. I mean, obviously he's feeling the pain as well. So yeah, it's one of those things where sometimes, and it's actually a really smart thing, right? For him to protect his mental health, he's just not looking at the portfolio, which makes sense, right? Like focus on the shit that you need to focus on in life. If you're so afraid of seeing all the red, don't look at it. And then check back in a month and see how it plays out. Also, you know how crazy it is that all of us right here in the chat are like actually obsessed with the day-to-day ticks and the candles on the S&P 500. Like most of the world that even is part of the investor class is not literally staring at every little intraday low that they see on the broader markets, but we are, because we're a different breed of junkies that care about the stock market. But in the face of being that different breed, we also have to remember, like, you can't get so obsessed to the point where you really start thinking bad things, because it's a game at the end of the day. And it's a game that has a bunch of numbers. These numbers obviously have implications on our lives because it's related to finances, but it is a game. And these numbers go up and down in the game. I mean, Bitcoin, this thing was at 95,000, now 83,000. If that's not the definition of a game, that is absolutely a volatile game. And you just have to be able to live with that volatility without letting it drive you crazy. And currently right now, I think everyone, is doing all right, understanding that it's one of those things where, yeah, we're sold pretty badly, and hopefully we are oversold and we get a bounce. But even if we don't, it's one of those things you just have to deal with as being someone who invests their own money, especially if you're not choosing index funds. If you're choosing individual equities, this is the game that you have to get ready to play. All right, cool. I think that's it. We'll see whatever the hell Trump says later today, and if that affects the broader markets. How can they live that way, not checking every 5 minutes? Dude, we're a unique breed of people. The 3,290 people that are here right now, we are a very unique breed that actually looks at Robinhood or Schwab or Fidelity every 5 minutes. I know I do. I want to know how many times. Dude, let me check my screen time on Robinhood. Let me check. How much time do I actually spend on this app a day? Let's see. I've never actually done this on Robinhood. Everyone else can check right now too, and you can give me the response. So screen time, wow, every day. You guys want to guess? Everyone guess. We'll end it out with this. Guess. How many hours do you think I spent on Hood? How many do you guys think? And it's not literally just stuck on Hood. So this is like amalgamated through all the random times I open up Robinhood. Okay, a couple of you guys got it right. 2.5. Yep, 2.5. Who said exactly 2.5? Someone said exactly 2.5. 2.5 hours. Robinhood is 2 hours, and actually it's almost 3 hours because 2 hours and 50 minutes. But yeah, basically 3 hours a day. Only 3 hours? Yes, only 3 hours. YouTube is 3 hours and 40 minutes, and then X is freaking 11 hours and 9 minutes. Oh, wait, this was on the weekly. Sorry, not the daily. Oh, the daily is better. Okay, so daily is 31 minutes on Hood. That's way more reasonable, I feel like. YouTube's an hour, and then X is 3 hours. Wow. That's kind of wild, bro. But on the weekly, it's 2 hours and 50 minutes. X is 11 hours. YouTube is 3 hours. That's not that crazy. 30 minutes a day. That's reasonable. Granted, it doesn't take into account Robinhood on my desktop, so, but still. All right, cool. That's it. I'll be back for the market close with Jason. That'll be a long one. We'll get his feedback from the technicals in terms of how this market is turning out. Yeah, StreamYard's 10 hours a day, basically. Definitely today is going to be 10 hours. And then we've got the quote-unquote State of the Union at 9 p.m. I'll be live for that, and we'll see what happens there. All right, cool. That's it. Thank you, everybody. Also, thank you, everybody, for the feedback on the new show that I put out yesterday. We're just going to call it the Daily Recap. Seems like that's a decent name for it. Got a lot of comments, and a lot of you guys liked it. A lot of you guys like it, and I'm really, really happy about that because I've been thinking about the direction of the channel and what could be like a daily format that I could do every single day that I would actually enjoy creating. And I got a lot of good feedback. People liked it. It was 21 minutes. It'll usually be 15 minutes. I spent 6 minutes out of the 21 minutes explaining the format, which people were laughing at because I talk so much. It took me 6 minutes to even explain what I was even doing here. But it'll try to be 15 minutes a day. It'll be a recap of everything going on. A lot of people liked the sort of segments and the chapters and the bullet points of getting every single piece of news. And I also got a lot of feedback of people saying, hey, I can't tune into the streams, but this is perfect at the end of the day for me to catch up with what's going on in the market. So I'm really happy about that because that to me is like very clearly allowing me to understand how to post on the channel outside of the live streams in a way that actually provides value to people. And so I was really happy about that. And Monday through Thursday, we're going to do it every single day and keep going. All right, cool. That's it. I'll see you guys on the market close. And yeah, it's that's it, dude. We got to be stolen. We've got to be stolen in the face of all this volatility. Hopefully Kris coming on and giving some feedback as well is keeping everyone a little bit at bay. Again, my biggest thing is just like, don't look at the portfolio if you're having negative thoughts, really bad thoughts. And high class your portfolio, clean up some of the stuff that you don't want to have. And that's pretty much it. This too shall pass. It might take some time. Nvidia going green right here. S&P 500 bouncing a little bit as well. But over the next couple months, we're going to see exactly how this whole tariff situation plays out and ultimately what happens with these stocks. All right. Thank you, everybody. I will see you guys on the market close. Stay stolid. I'm about to go to the gym and I'll be back for the market close. All right. Bye, everyone. Have a good one.